How are you all doing? So I was just having a chat window malfunction. You know, you quite often get chat window malfunctions, do you? It's a normal thing. How's everybody doing? Morning, Michael. Morning, Marion, Jamie, Johannes, Dwee, David, Jacob, Brian, Diamond. How are we all doing? Gold over 2,000. Yeah, be careful today. Be very, very careful today. We're already 125 ADR. Well, it depends on which way you look at DAX. If you look at DAX from a... oh God, I haven't got the ADR indicator on here. Hang on a minute. ADR, where are we? Market. Yeah, we're already... Oh, somebody... Pop up, so that's off. Yeah, we're already 125 ADR on the DAX. So just be careful today. There's a massive thing going on with the banks still, obviously. So yeah, gold. The US dollar's collapsing, basically. Not collapsing, but there's a lot of money coming out of the US dollar going into the yen again. So if you look at the ADRs this morning, there's, the yens are all hit, every yen. So they're piling into the yen, which means the stock market is likely to come down. We've got a big gap down on the DAX. The potential is there for more movement to the downside. So morning, Clarence. Morning, Virginia. Yemen. How are we all doing? So yeah, be careful today, basically. So the opening range breakout EA is set to run on the DAX. I've got a new EA account, which I've just started this morning because they've got a sale on. So I just thought, I'll buy a couple of accounts, as you do. I'm going to keep one in reserve and one I'm just going to try and trade up. But so yeah, be careful with the ORB today. I'm not quite sure where we're going to go. If you look at the news over the weekend, what's the time? We got 5 minutes, haven't we? Morning, it's time. So I won't go through all of the news, but deposits of Signature Bridge Bank will be assumed by a subsidiary. Yeah, so UBS wants to complete the Credit Suisse deal as soon as possible. Yeah, so there's all this, look, over the weekend, and it's all to do with the Credit Suisse bank bailout, basically, and there's a lot of it. There's a lot of other banks which are not teetering on the edge. There's some institutions on margin calls. There's a lot of problems, basically. I don't think it's anything that they can't solve, but it only takes one bank to go, actually, this is too complicated, can't be bothered. And all of a sudden, you've got a lot of banks in deep water. So the yields are down. There's all sorts of stuff going on, basically. But I don't think it's a 2008 crash type thing. However, it all starts with a few banks falling over. So we've got banks falling over. So we need to be careful. News today, it prompted the Fed to come out and do an announcement yesterday, obviously. So it's big enough that the Fed have come out and said, holy crap, boys, be careful. So just be careful. If you're going to mean revert stuff without stops, if you're going to position trade, just be low risk, wide spacing. So it's a bank holiday in Japan today. Often when we get a bank holiday, it's not. So that's tomorrow. Often when we get bank holidays in Japan, we get a lot of movement off the yen. It's already there. So yeah, so basically there's nothing happening today, but tomorrow we've got a bank holiday in Japan. So quite often the US and the UK market take full advantage of that, and they run the yen in one direction or the other. So this week is absolutely chaos week. So Tuesday, we start off with CPI on the CAD. We've got Lagarde speaking as well, but the main thing is the Canadian dollar CPIs. Then we've got the CPIs for the pound on Wednesday. Then we've got Lagarde speaking again. Then it's FOMC. So we've got the Fed fund rate on Wednesday evening, followed by the FOMC press conference. This is going to be a biggie. Then Thursday morning, we've got the Swiss National Bank's rate plus the SNB press conference, followed by the UK's rates, followed by US unemployment, followed by the PMIs. Yeah. So this week is huge. We've got inflation figures and interest rate figures coming out from 3 of the big 7. So yeah, it's going to be a big one. It's going to be a really big one. But today we've got nothing apart from obviously the banking system collapsing and the world exploding, and obviously Putin getting arrested and shooting nuclear missiles. So nothing much to worry about, is there? So yeah, so that's basically this week coming up. So it's not going to be pretty. It never is. Which obviously is an opportunity to make money, which is good. Afternoon, Brian. Morning, Brian, even. Morning, Papa. Shyam from India. Hello, welcome aboard. So yes, so let's hit the like button, see if we can get some more people in here. We've only got 12 likes, there's 63 people in here at the moment. Come on, hit that button. So DAX is doing the run at the moment for the gap fill. So, all right, we're already going. Fine. What I was expecting, which isn't going to happen now, there was a pre-market long. I didn't take it this morning because I'm not sure when we gap down over an ADR. I'm never sure where we're going to go. You never know where we're going to go, but obviously when you've gapped down an ADR, there's a reason for it. So I was reluctant to take the gap fill this morning. Should have done, obviously, in hindsight now. So the pre-market 15 is a big one this morning. So the chances are we might spike up to that level, up to the gap fill, and then pull straight back again. So I would be careful if you're taking the pre-market 15 today. Just be ready. If we hit that gap, I would get yourself break even, because there's a chance we're going to do that and then we're going to come down and collapse. Don't forget, there's a massive, massive fear in the market at the moment. Last fear and greed index was obviously last Friday, but it's going to come out extreme fear this morning. I can guarantee it. Or this afternoon. We don't get it until this afternoon, but we're going to shift down to extreme fear this afternoon. I'll be very surprised if we don't, but we'll know that because all the money will be piling into the end this morning. So 8 seconds to go. 5. Here we go. Let's see where we go. Morning, Franco. Morning, Luke. Morning, Sweeping Low and High. Sweeping Low and High. Good name. Critical London Open. London is open. So I've got propulsion gap. Not a very good one because it was more rather than a accumulation, but there is a target out there as well. But morning, Astro. Afternoon. Good afternoon, good morning, good evening, and good night. Franco, why are you putting beer up at this time in the morning? Last thing I want is beer at this time in the morning. We'll have a look through the ADRs in a minute. Obviously, it's all yen based, but we'll have a look at where we are with those. So there's a good chance that we may well get some reversions off of these. We'll see what happens with the DAX. So we haven't managed to get quite up there yet. It's not particularly explosive open, is it? We did have obviously all that pre-market movement, so it's volatile before the open anyway. So I might have a whiz through all the pairs actually today. The other thing we've had over the weekend is the COT report updated. Let me just check the CFTC. Whoops. Oh, there you go. March the 7th. Yeah, that's the last one I got. So we got March 7th now. So that's all updated on the website, the COT report. There's quite a few changes in the COT. A lot of neutrality now in the COT. So there's an awful lot of undecision direction-wise. We'll have a look through it all in a minute, though. Just want to see if we get this gap done with the opening range breakout EA. Not actually managing to get a lot of volume out yet. We're stuck. Anybody do anything exciting over the weekend? Anybody go skydiving or driving cars fast around tracks or fishing? Fishing's not exciting. Unless you're fishing for marlin or something, that's pretty exciting. But... okay. This isn't exciting, is it? This is about as exciting as watching paint dry. 2 minutes left on this opening 5 minutes. Excuse me. Not really going anywhere, are we? The Whipping Post. I rescued 36 children from the top floor of a burning hotel. Wow. What's your name? The Rock? No, now he's going to come out and say he's a fireman, isn't he? And that's actually real. I did absolutely nothing exciting this weekend. Went out for a very, very nice meal, though, on Saturday. To a very posh restaurant. One of the... we have this program in the UK called MasterChef. Don't know if you have it everywhere else in the world, but went to one of the MasterChef's restaurants. Very posh. Very expensive as well. Swam the English Channel. That's not bad. Cold. It's only 5 degrees of water at the moment. I hope you were wearing goose fat. Watched it snow. Well, that was exciting, Brian. What did you do this weekend? Sat there, stared out my window, watching it snow. Dull. I studied charts and listened to Al Brooks. Well, now that is a weekend well spent, Andy. Good man. Man with nothing to do. Listening to Al Brooks. Yeah, that'll send you to sleep as well. Morning, John. I had a cream egg brownie, which was outstanding. A cream egg brownie. The hell is that? There's your 5 minute range. So we've rejected the pre-market 15. So that's your 5 minute opening range. Nothing very exciting there. So you may well have just gone short on that little spike down on the 5 minute. So if you took the 15 minute pre-market and you're taking the 5, you are hedged. Which is probably not a bad thing at the moment because this market doesn't really have much direction. If you look at this on a market, on a broker with pre-market data, which isn't real data, but you can see obviously the extent of this pre-market drop, which we've completely undone now. But yeah, I mean, it's a big move, fairly big move down. So I've hedged in now. I think, in theory, one of those should work, shouldn't it? Morning, Stevie. Think chocolate brownie with half a cream egg stuck into it. Oh, that actually does sound pretty good. Cream egg brownie. Cooked barbecue brisket and listened to your boot camp all weekend. People are starting to talk, Franco. What are you listening to? Some bloke in England talk about trading. Okay, right, we're going short on the 5 minute, definitely. Let's go. Does green beer count? Does green beer count? What, as drinking beer? Yeah. Drinking beer counts, yeah. That is something. That's doing something. Okay, so it's more money starting to come into the reason I'm watching the US dollar yen is I just wanted to see what the strength in the yen was. Typically, obviously, the US dollar's fairly strong most of the time. So if we're coming down against the US yen, we can see there's really good strength in the yen. So we are starting to get a little bit more safe haven run at the open, which means DAX shorts. I just wanted to see if we were going to get this gap fill, and I hate it when we don't do it. I hate it when we don't get gap fills because it leaves an upside target, which gives obviously a difference of opinion at the open. But see where we go on the 15-minute. I won 2 parlays. I have no idea what that is. And isn't parlay when the Pirates go truce? You won 2 parlays and made $500. I don't even know what a parlay is. All I remember is parlay out of the Pirates of the Caribbean. Racing. Oh, right, okay. I'll be stopped out on the pre-market 15, and I am short. And locked in profit on the short. Second short on the 15-minute pre-market about to trigger. So second entry going in there. Look for break that low. And then hopefully tumble out of bed to the downside. Morning, Amadeus. No, wrong one, sorry. So there's nothing really getting any more extended on the yens at the moment. Aussie yen is the most extended at the minute. 125 straight down into support. Gold is another thing you can watch to find out if we're running on the safe havens or not. If we get a rally on the gold market, that will obviously indicate that we're going into safe haven as well. Also, that's nearly 125 ADR on gold. Look. Just be careful with these ADRs this morning. Just be a little bit cautious about trying to mean revert these. If we hit 100 ADR before the London Open, obviously there's an opportunity for them to push during London, and we've got 200, 225 ADR runs. So just be very careful trying to mean revert anything this early in the morning. Dodgy day today, I think. A parlay is a type of sports bet, not a racing though. All right, okay. Made a bet on basketball. All right. Very nice. Made $500. You know what you can do with $500? You could buy an evaluation on a 100K account. Morning, Mario. Been in a trading group holding hands. Sick of them already. Sponge traders, the whole lot of them. Cut them loose. Yes. Most trading groups are full of people wanting to be spoon-fed. Because everybody believes there is a system or a strategy out there that they can use to spoon-feed them a millionaire. Send them over to my website. Get them to watch the bootcamp. Tell them it's all free. That's what everybody in here right now who's in any other trading groups, go to all Telegram groups and all Discord channels you're in and send them a link to the Position Trading Bootcamp on the website. Tell them there's a free 10-hour course that will completely change their lives. And there is no spoon feeding. They can just watch that and they'll know everything they need to know about making money in the market. You'll all become disciples, and they'll all start pestering the hell out of you with questions, which will be great. But then send them to the Telegram group and they can pester the hell out of me. Come on, DAX, let's run. I already want to see a big run out the downside of this pre-market low and get a nice pop. It's more money in gold. So this is coming up for the 15-minute opening range. So there's your high, and this will be wherever this candle closes is going to be your 15-minute opening range low. So it's fairly wide range. Slightly worried about leaving that gap, but we're in extreme fear, so there's every opportunity that we might just run away from that gap and come back and sort it out at another time. Just looking for downside targets on the DAX. Oof, I'm there. Oh, blimey. So I would say we're looking at 145.18 for our first pump of the brakes. Monthly range hit on the Swiss yen, which is what, 145.18. Which is there. New Zealand yen 125 ADR. Again, be careful with these are going to keep pumping these yens, I think. So, okay, we're out the lows. Oh, I've TP'd. That'll do. That's fine. I'll take that. $917 profit. Thank you very much. I'm just going to pull my stop down to break even manually. Wouldn't normally do this, although I am today. Just want to protect that $1,000 basically. Because we have a very large propulsion gap formation there. So I think we're probably going to pull back before we run. Although we might just flush, which is fine if we do. I think I've got 1.5 hour target on this, haven't I? Yes. Extending targets. If we're going to flush, we're going to flush. Might as well take it. I wouldn't put that curse on you. I don't mind. I honestly don't mind. If you send lots and lots of people over to the bootcamp and they learn lots, that's the job done. Hindi, is that what you are, or are you using a secret code? Gajanan, good morning. There's your 15-minute opening range in. Let's watch the one we can see. So there's your 15-minute open. Play back inside into propulsion and break of that low potentially on the cards. Swiss yen 125 ADR. I think I said that already. So after this level, we're looking at 150 ADR as next support. And then obviously failing that, back down to there. So a lot of movement, a lot of room to the downside, obviously, today. This is the accumulation before we actually started that push. So this is where I would expect to get tested eventually, which is just beyond 200 ADR. We've got a couple of stops on the way, obviously, one that we're just coming into now. We've got this gap fill to complete as well. So it's difficult to know which way we're going to go, obviously. You never know. No one ever knows. So just keep that in the back of your mind. That we're going to come back up there at some point, but we're not going to do the fill straight away. Could come back at any point. But if this banking crisis is a banking crisis, there is absolutely no reason why we'll come back here. We will just leave these guys and we will go. So see what happens this morning. But so there's your 15-minute opening range in. One stop out on the long on the pre-market. Short on the 5, short on the second pre-market. So if we get a push down, very nice profitable morning. Right, let's have a look at where we are with everything else. I'll keep an eye on this, an update if anything exciting happens, but I'm not going to sit here and watch it all morning. If you've got a broker with pre-market data, the low is actually 145.03, which is roughly there. So if your broker uses pre-market data, that's likely where they put the bounce point in. None of this pre-market data is real. It's a an estimation. So that's your real support, and that's your fake support, if you like. So, but both in pretty much the same area. US dollar yen ADR. Okay, so we are officially screwed on the yen. So don't try and mean revert these. Just be very, very careful. I've got a funny feeling this is going to be a big 200 ADR day today. So 125 euro yen. So be careful. Be short, basically. Short everything. Well, don't short everything, obviously, because if you short everything, you can't take a position, can you? Duh. Okay, 150, 145.18. Okay, so there's the support. You see some limit orders triggering at support at the moment. They're buying it up. Got a feeling this is going to get run over, though. 2 minutes left on this candle. If we close bearish through it, I suspect that's it. We've got a second propulsion gap going in now. So that first turnaround left a propulsion. We've got another propulsion there. So there's one big propulsion gap in play. So this is where we're going to come back and test somewhere up in here when we pull back. If we pull back, obviously, if we get one of those, falling out of bed days, yeah, which we've had plenty of, haven't we? Just stay short on it. In fact, what I'm going to do is I'm going to cancel my take profit completely. I'll just take whatever. If we go 225 straight down, I'm not going to get out. I'm just going to get out with the trailer. So I've got a trailer locked in. It's guaranteed profit regardless. What's the target on this? Sorry, one sec. This is enough to just remember. This is a new evaluation, isn't it? 4K target. Let me just put a 4K target TP in, just in case. You never know, just in case. So what if I banked? 917. 4K minus 914 is 3086. You never know. You never know. God, that's going to be, no, that's not going to happen, is it? That'd be nice, wouldn't it? 3086. I'll call it 3100-ish. There you go. So if we can just do that today, if Putin was to come out and say, I'm going to launch a nuclear missile or something, then I'm going to hit target. Mind you, if I hit target and he's going to do that, it doesn't matter, does it? Because I'm not going to be able to trade the account because I'll be dead. Anyway, falling out of bed nicely. So just stay short. Right. Yeah, so if we get one of these big down, what I was going to say was if we get one of these big down days that we've had on many things recently, yeah, where it just doesn't stop, you get the little flag pullbacks and we just collapse out of bed. Yeah, if we're going to get one of these, stay on it. Just going back to Friday, yeah, one of those. So this was the day we fell out of bed, and I got in, if you remember, I got in the opening range breakout that morning. I got in here and I got out here, and then it did that. So I'm not making that mistake today. If it is going to do that, I'm staying in. Though I think I'm about to get stopped out. And I've got 110. I've got 110 trailer on it. So my trailer is actually that big. Although it does look like it's coming back. So right. ADRs. Actually, what I'll do is I'll start with the website first of all. Franco got two nice 15-minute candles. Large position, watching like a hawk. Very good. Been short on CAD yen since 7 a.m. Excellent. Any thoughts on TP target? Can't see much below to stop it from dropping further. CAD yen. Yeah, I mean, your obvious target is there. 150 ADR. You're going to find some limit orders triggering down there. Whether there's enough to, when you're having a safe haven rush in a crisis like this, doesn't matter how many limit orders are there. In fact, what you'll find is a lot of people will remove their limit orders because they don't want to be long. But 150 ADR is where you're going to find some kind of support. Failing that, you'll be coming down somewhere around there. So that area there. 91, so basically 92. That is your 92 big round number. But that's 300 ADR away. You know, we're not going to get, well, I say we're not going to get there. We've had 300 ADR days, haven't we, during this crisis so far? So there's no reason why. All it's going to take, all it's literally going to take today to force this deeper. And bear in mind, we're coming out of a weekend. We don't know what's happened over the weekend in the banks. There's every opportunity that one of the banks is going to come over today and say, sorry, guys, we're screwed. And that's just going to pump further down. So that'll be the fourth bank basically going, won't it? So it's the start of a collapse. If it happens, obviously. If it doesn't happen, it doesn't happen. The bailouts are all going on. So ECB's Kazakh's ECB isn't done on rate hikes. Yeah, we know that. Okay. Right. So all these ADRs basically, while we're talking about CAD yen, Aussie yen, Swiss yen, Euro yen, Pound yen, New Zealand and US, though all have hit ADR today. So pullbacks, but potential shorts. Again, all depends on what is happening with the news today. Yeah, so we've got no news scheduled to worry about at all. So it's all about the banking crisis at the moment and all these banks falling over. So it's really down to what happens with those. But the market, as you can see, is incredibly sketchy today. It's not really interested in doing anything but selling off. People are pulling money out of the stock market. They're pumping it into the yen, pumping it into gold. They're just keeping it basically there. Swiss franc as well, we need to have a look at and just see what happens to the Swissy. We quite often get a lot of money piling into the Swissy, which doesn't seem to be happening at the moment. Obviously, the Swiss National Bank, or the Credit Suisse being the first bank that was under pressure, they're obviously not classing the Swiss franc as a safe haven, which is obviously very fair. So with the Swissy, could go either way. It will power up and dump how it seems, however it wants to, really. But gold and the yens is where you're going to find the money flow today. You'll also find money coming into the pound a lot of the time in these sorts of situations, which looks fairly like it's happening at the moment. Obviously, we've got a very large banking sector, so we're the sort of banking hub, if you like, or capital of the world. So when you get money needing to be moved around, and you're not using the SNB, which is typically where money tends to get moved from Europe, you're going to use us. So we're going to find a bit of strength possibly coming into the pound as people are dumping money through the pound, through the UK banking system as well. So a little bit of strength showing there this morning, but yen is where you want to be focused. If you're not on them though, that is, look at what we've had with these. Yeah, so just look at the US dollar yen as an example. Yeah, that's 290 pip move on a 200 ADR. That's 150 ADR. So 150 ADRs, 200, 225s in crisis like this, definitely possible for mean reversions. However, you have no idea or no way of telling when these reversals are going to happen. So trying to get on short is difficult because you kind of missed a lot of the move, or have you? Yeah, you just don't know. So you're getting on halfway through a move. So you're either thinking, right, we're going to get 200 ADR day, get short, or I've missed this. I'm not going to get on it. I'm going to wait for 200 ADR and I'm going to mean revert it. Or 175 or 150. Whenever you get the reversal of that, basically, but as soon as you get that structure break back up, there's your opportunity. That's when we may well be starting to turn. But you're not going to get many reverse alerts on these. The speed these things are moving, it's difficult. DAX has pulled back. I think I'm probably stopped out on that. Yeah, so I'm flat now. That's all right. $1,100. I'll take that for breakfast. So tapping into first propulsion. So there's an opportunity to go short there. Failing that, up to there, short. That's a pretty good spot, I reckon. Look at the strength coming in. I'll just get short on that there. That's good. Definitely rejecting. So yeah, all these obviously, we'll just look at all these quickly, but you know the story. Whoops, wrong one. You know the story with these. We're collapsing. So look at what we had there, 282. It's 200 ADR. New Zealand yen 150. 200 already. So still got more potential downside. Forget support resistance levels. Yeah, don't try and look for somewhere it's going to bounce. I mean, you can, obviously, but, you know, just don't expect necessarily a bounce at 150 because that's where support is. This thing will go where it goes. They are pushing money into the end. They're putting it out the stock market. So it will go where it wants to go this morning. CAD yen, again, huge drop. We're out of support. That could go anywhere it wants to. Swiss yen, 150. You can tell they're pulling money out of the Swiss franc because that's one of the strongest at the moment. So they're pulling money out of the Swiss franc, putting it into the yen, which is why you've got the biggest movement on the Swiss yen. Euro, that will suffer as well because of the Swiss. So there's your support. Look, not really paying any attention whatsoever. Pound yen, pound will be the stronger one. So that's obviously holding up a little bit better. New Zealand dollar yen and US dollar yen. So yeah, just be careful. Don't mean revert them yet. You can do what you like, obviously, but I would be a bit wary. Euro, US dollar, Franco. What's going on with that? That's coming down. So yeah, that's interesting. The euro is coming down. Yeah, pound very, very strong. Look. I would expect money to come out of the US dollar, but it seems to be holding up well. Ooh, look at that Swiss franc. That's in big trouble, isn't it? Is that a resistance? Straight out of propulsion, look. So tap straight into it. Oh, off we go. Damn it. I want to short that again. Perfect scenario for me today would be that is your 5-minute opening range low. There. No, it's not. Sorry, that's your 10-minute. That's your 15-minute opening range low, which I'm not trading. Actually, yeah, no, it's no perfect scenario for me. I'm done with it. I've done my profit on it this morning, so I'll leave it. But yeah, that's coming down hard as well. So either that or that. Just be wary of that. But I don't think we're going to get back up there this morning. We'll see. Might do. This might be a fake move, and they're just going to reverse the yen. I don't think so, though. Getting 22 pips already on Euro US dollar. We'll protect it. Check out the nice retest of support, turned resistance on the DAX 1 hour. Oh, yeah. Be nice. Swiss pairs, you moving? Yep. Stuart, spent the weekend doing your boot camp. Thanks for putting it out there. Cool. Everyone's been watching the boot camp this weekend. Good, isn't it? Right, let's do some analysis on other stuff. Right, so COT report was updated at the weekend. So we are still way behind, though. We're reporting the 7th of March figures now. We are on the 20th of March, so we're still a couple of weeks behind on COT. You can see from the combined scorecard, we've got a lot of 2s, 3s, 1s, and all sorts in here now. We were solid +4s, -4s, and that was pretty much it until the last lot of updates have come around. So the positioning in the futures market is now very mixed. We've still got a long short bias, but that long short bias is weak. The only thing with a very strong bias at the moment really is the euro and the yen. Obviously, you can't. What's happening with the yen at the moment? We've got a massively strong yen. The market overall was positioned short on it, but this is long-term positioning. This isn't run for the hills, safe haven buying or selling. So you're going to get a complete, what's happening at the moment with this massive strength coming in the yen is purely because of what's going on with the banks. With the banks coming out and saying we're absolutely fine, that is all going to get completely undone, which again signals weakness in the yen. So the banks are still forecasting long-term weakness in the yen, but everything else is pretty much in the middle. So you're sort of 40s, 60s, and in between, apart from the euro being strong. That sentiment that we've got there is before we got the latest the latest interest rate figures for the euro and the forecasts. So we got that 3.5 and the forecast of 3.75 being the terminal rate. So what you're seeing with the forecast long here is back in time a couple of weeks when the market thought that, as Lagarde said, they were going to do 0.5%, and then 1/4 to 0.5%. Yeah. Now it doesn't sound like they're going to do that. We keep getting these little snippets of news coming out saying 3.75 is going to be terminal rate, which I just can't believe. You can't look at the fundamentals for the euro with an 8.5 inflation rate and the highest unemployment in the world and say that you are going to stop increasing your interest rates. This thing is not coming down at any shape or form that is going to get you back to 2% this year. You need to up this. So we will see. Lagarde is talking twice this week. Tomorrow after the CAD announcement, and then again tomorrow morning after CPI. So there's opportunities for her to come out, I think, and say, like, you know, we will still up these rates. She was pretty bullish in the press conference after the rate announcement last week. So I still think there is a lot more strength to come in the euro. But obviously what's happening at the moment with the banking issue, you have to be a little bit cautious. I'm really tempted to take another short on the DAX. So I'm just going to get my price action toolkit ready. Let's set this up for 5-digit broker. I'm not going to use trailers. Let me just turn all these off. Don't want crap drawing all over the charts. It's a bit tight now. Just sticking a sell stop underneath that low. Need to do the offset as well. Okay, so I'm just going to take another short. Basically, we're just retesting this propulsion gap. So pending order under that low. If we push up further, that's fine. I'll drag a pending up, ready for an entry short. Yeah, so obviously I don't believe that this is going to be terminal rate, this 3.75. I think we've got further to go on the euro. So obviously these figures, just be aware that they have changed the bias scorecard quite significantly over the last couple of weeks. So there is nothing where we had sort of 8s, 10s and 11s for strength, strong, long and short. We are now not getting that. Yeah. The weakest sell we've got at the moment is the CAD Swiss with a -5. The pound US dollar is a -4. So, you know, there's not as much strength in the market or weakness in the market now based on commitment of traders. Retail has gone a lot more neutral as well. Yeah, so we've got a lot more sitting in the 60-40 area. This was really stretched. We had a lot more big strong 2s and -2s on this. We haven't anymore, especially with the Swiss franc. They're still longing the crap out the Swiss franc. Well, I say CAD Swiss they're longing, and Aussie Swiss, but the rest of it is all dropped back inside here now. So the market's very contracted. There's no real strong long or short bias, which is good from a mean reversion perspective for us, position trading. That's exactly what we want. 80% of the time the market spends in a range or in a mean reversion state. So the better for us. The range bound pairs are better for us because if we get a strong move on RSI, there's much more probability of reverting to mean. Yeah, so it's good. It's good that everything's contracting, but there's no real strong buys and sells from from this perspective. So we've got no plus sixes and minus sixes here at all from a retail sentiment and COT for intraday. So and obviously the buyer scorecard obviously is a little bit more tricky to trade now as well. All the yens have disappeared off there as well. So yeah, very, very tricky at the minute to know what anything is doing. Still pushing. So it looks like we're going to come back up and retest this propulsion gap. Take that one off for a minute. Right, RSIs. So there's nothing on the 4-hour RSIs at all. So the left 3 columns here are the 4-hour RSI extensions. There's nothing at all there. So everything that we looked at last week has played out. Had a really good week across the board. Banked loads on all strategies. ADR reversals, H1, M5, H4, M15, all banked loads last week. So we had lots and lots of movement. So there's nothing on the 4-hour extensions. The hourlies, the best thing we've got at the moment is the US dollar yen. So if you look at all of these RSI extensions that we've got, the green ones, they're all basically the yens. So what we've just looked at on ADR, obviously because it's extended on the average daily range, obviously it's extended on the RSI as well. So there's no point really in looking through all of these. They're all RSI extensions. So normally I would be saying, yeah, brilliant opportunities to get in on those mean reversions. And there's a very high probability that that is exactly what we're going to get on something like US dollar yen. However, just this morning, we need to see if this is going to be one of those 200 ADR drops. We just don't know at the moment, do we? So these are quite risky to take first thing this morning. But there is a good probability that they'll play out as well. So the only thing we've got extended on RSI is the pound CAD that is not a yen pair. And that is a very nice short. However, obviously there is money coming into the pound at the moment because everything's flowing back out of other currencies into the yen, and it's coming through our area, which powers up the pound. So that will stop at some point. This is a beautiful resistance bounce as well. Look at this pound CAD, gorgeous RSI extension to the upside. So you got an entry opportunity on this on Friday as well. Didn't play out. We got this propulsion gap to the downside. I'm in it, as you can see, from an older position, which I'm still in. I've only got 3 on it. It's not big, but yeah. Average is there, not too worried about it at the moment. The only reason the average is there is because of this huge move that we've had off of the run up into the banking problem. Since then, all we've done is go sideways. So any kind of movement back down to retest that propulsion gap and eventually a drop out the lows. So pound CAD, look at it from a fundamental perspective. Range bound, ever such a slight long bias, and as you can see, retail. So we've had retail basically shorting this now for the last 3 or 4 days, which is why it's holding up long, because they're just taking the liquidity up at the highs all the time. Yeah, every time the market shorts it, they go long, short it, go long, short it, go long, still shorting it, they still go long. But we're only a +1, so they're not massively short. So at some point it will pull back down again, but good spot to take that from up at the moment at the up there. But that's it on your RSIs. So I'm going to whiz through all the pairs today. Might as well just do an analysis across the board. As you can see, there's nothing I would say is a huge strong buy or sell at the moment, apart from the US dollar CAD. Everything else we've got here is 4s and 5s. And as soon as that retail sentiment drops off, these are all going to become range-bound signals. So there's nothing really I'm interested in not getting into. Everything can mean revert as far as I'm concerned at the moment, apart from the US dollar CAD. That's the only one I want to stay fully long on. CAD Swiss at the moment, obviously this is to do with the Credit Suisse and Swiss National Bank issue. So kind of scrub that one off at the moment. You don't really want to be trading the Swissy too much because it could go anywhere. But anyway, let me just catch up on the chat before we do that. Is DAX going to retrace back? It is, Umer. It is retracing back right now. I should put WRB on here, shouldn't I, so we can see. So we're pulling back up into the initial move, basically, at the moment. So we're looking for shorts out of here, but obviously only on signs of weakness, which we have not got. So basically just this morning, just putting in what looks like a V-shaped recovery at the moment, isn't it? So I will be taking, if we get back up into here, I will be taking a second entry on the 5-minute opening range short or long. We might be coming back up to that gap fill by the looks of things. We'll see. Certainly no signs of weakness, is there? So this looks like it's just going to become a V-shaped recovery, and then we'll start the move from there. Hopefully. Still not weakening on the ends, particularly, are we? We've got a little bit of a pullback, but not, you know, not this sort of strength. So pound yen, you've had a reversal alert. Euro yen, nothing yet. Swiss yen, CAD yen, Aussie yen. So they're all about to revert, potentially start a mean reversion, but you're buying straight into a propulsion gap there, for example. So just be careful. This is more like what I would expect to see out of that level. How long have we got left on this candle? 30 seconds. It's getting ready to jump in. Why is my offset not kicking in? Ah. Right, just going short. I'm going to add on a break of that low. So this is either going to be a propulsion retest and drop and get some kind of movement like that happening here. So stop above that high. If that high is invalidated, I want to be out. If it isn't, there's potential to come back up and do the gap fill, which you can't actually see on this platform, but obviously there's a chance to come up here and get that gap fill done. And from there, who knows? Basically, which just means we've done a false move at the open. So see how that one plays out. Franco, wow, 8% profit on bankroll. It may be a good week after all. My day is done. Blimey, okay. Your day is done. Your week is done. My broker changed to MT5 and now I have to repurchase all the indicators and EAs. Switch broker, David. Just change broker. If your broker switched to MT5, change broker. There's no reason to. It's laziness on your broker's part because they only have to buy one license. And the one license they need is for stocks, and the stocks is on MT5 only. Futures. Just switch broker. Cheaper. It's cheaper to switch broker than it is to buy all the indicators and EAs again. My broker also changed to MT5. Already bought the EA for both MT4 and MT5, I think. Who's your broker? Who's this broker changing to MT5? They're committing suicide. I don't know of any brokers out there that only offer MT5. Prop firms, yes. There's a couple of prop firms that only offer MT5, but it's mainly because they're futures based. So, do you think Euro Pound is looking like an interesting long on the daily? I don't know. Don't pay attention to the daily. The daily is only used for directional bias. And at the moment, it is... Whoops, didn't want to do that. At the moment, it is sideways. Totally sideways, look. There is no directional bias. Moving averages are flat. Yeah. Where's it going? Right now, you're bang in the middle of a range. Yeah. There's a 50-50 chance of that going up or down. It's just crazy, crazy trade. No point in taking that in any direction whatsoever. Ah, sorry, you said Euro Pound, didn't you, Caesar? I'm looking at Euro US dollar. Short. Although I say that, look at the 72 moving average. You are flat still. So it's starting to look short. However, I just can't see it. This is temporary strength on the pound. I don't think this is going to be sustained, this strength. Oh, you cow, Dax. I'm going to stop out on that entry. I shouldn't take too tight stop trades today. Yeah, don't know, Euro Pound. I mean, I think it's a short bias from a fundamental perspective. All pounds are short bias from a fundamental perspective. It's bang in the middle of the range at the moment, and that's because, look at the COT bias, yeah? The COT bias is long because the futures market is short the pound and they're long the euro. Massively long the euro, 73% long the euro. Yeah, they are really long the euro. At the moment, though, you've got retail also long on it, which means it's coming down because they're driving against retail. They're finding the liquidity on retail, which is all to the downside. So temporarily, I would say, yeah, but I'd be wanting to buy it, basically. Wait for RSI extensions, basically, on that one, I would. Yeah, got a nice potential support area to buy out of. It's range bound. Yeah, like I said earlier, 80% of the time the market spends range bound. 20% of the time it trends. So you buy from the lows. You got that whacking great propulsion gap. Those are target to the downside. So I would say that's coming down there at some point, but maybe now, maybe not. Where's my man? Where's my man? Very nice John Wicks on the 5 minute. Mr. Wick. Holding at the minute. Right. So my boss rolled up on me 3:39 a.m. All good, but how do you tell your boss? Get lost, I'm trading. What's your boss doing there at 3:39 a.m.? I stopped out on the DAX short. Git. I'm just going to extend my stops. That's too tight, I think, today. We're too volatile. So I'm going under this low still. Yeah. So we have just stopped me out on that. My stop's too tight. There's your propulsion gap. So I'm expecting the sellers to step in from here. We did get completely run over there, but either that is going to work or we're going to push up. So any signs of weakness, we've got lots of wicks forming on the highs. So there is a lot of selling activity coming in here. They are adding into their short positions, but we seem to have a fair bit of buyers as well. So as soon as these buyers that are holding this up at the moment get run over there, I want to be jumping on board their puke and on board with the sellers that they're adding into their shorts there, looking for a target down below that low. Right. Morning, Jonathan. Damn it, took a sterling short, $500 up. Didn't pay myself, then got stopped out with $47 profit. That's because you used a break-even profit, Jonathan. If you use a profit, if you use a stop loss order, yeah. If you use a stop loss order, you will get stopped out. Simple as that. You put an order in the market to tell you to take out $47. It did exactly what you told it to do. Don't use them. Beats a blank, as Franco just said. Yeah, so it's better than nothing. But remember the boot camp. I should have my boot camp. I should have my boot camp ready to go, shouldn't I? At a moment's notice. Remember what happens in the boot camp on day 1 of the boot camp. There is a slide, which is a very important slide. This one here. Getting stopped out all the time on most entries. Getting in just as the market turns the other way. Number 8. Moving to break even and getting stopped out on a pullback. So common and so avoidable. Pound US dollar's pushing out these highs. We got a weak US dollar and a strong pound this morning, which is interesting. Not quite sure why. We are holding, sellers are holding this area at the minute, where we don't have enough on board to drive it down yet though, so we'll see where we go from there. Brian, can focus today. I'm glitching for some reason. You can't focus today. Definitely glitching because you can't even write the word can't. Security worker you are, Franco. All right, okay. Gun and all. Oh my God. Your boss is very brave then if he's turning up at 3:39 in the morning when you've got a gun. I'd be creeping up on you. Or actually, I'd be walking towards you with alarm bells ringing going, hello, I'm here. Got 22 pips down, now 11 pips up. I'm good luck. Where are you looking for DE40 buys above? I'm not looking to buy the DAX, Umair. I'm not looking. If you're looking to buy the stock market in a stock market collapse, you're nuts. Just right. The banks are all going pop. Large institutions are getting margin called. Yeah. You do not want to be buying the stock market in this situation. The only way the stock market is going is down or sideways until this is resolved. When this is resolved, then it's going to take, a while for either the next one to pop. Here you go. Small Goldman Sachs news coming in. Lowers level of UK growth. That's fine. Lowers the level of Euro area GDP. Evergrande will announce principal terms, blah, blah, blah. Don't worry about that. Yeah, so nothing else coming in. But yeah, you don't want to look to buy the stock market in this sort of scenario. You want to sell it. MPA, oil. I look at oil. Yeah, let's do analysis of oil now. So oil fell out of bed last week. This is the area we were looking at on the daily. Yeah, which is this area here. This was our next level of potential support, resistance. Yeah, there, which is highlighted. That's what we slammed through. So we've come down through that area now. We've fallen out of bed. What we were looking for was a continuation bounce from here. So we pushed all the way down into there. We pushed back up. We pulled back. We made a new high. So market structure shifted to the long side. Then we came down and put in a double bottom, which is fair enough. Then we put in a lower high, which gave us those warning signals. Then we put in a higher low and a higher high, which gave us that, we might be going where we thought we were, and then we've absolutely collapsed. So it's very, very difficult to tell where this is going to stop. Target for the year is 107, according to most of the banks and institutions. $60 a barrel was not on the cards by any shape or form. So we're obviously coming down at the moment because of this massive issue that we've got internationally with the banks, and obviously what's going on in Ukraine as well isn't helping. You can't really pick a downside in this apart from, obvious support levels that we've got coming up. So if you look at the levels that I've got drawn in at the moment here, that wick coincides with this area here. There's a few touches on it. We've popped up a little bit above it. We touched it there and reacted. We reacted a lot there. We hovered around it in balance. Then we came back, retested it, pushed away. So this is a strong support resistance level, which is 61.5. So 61.50 a barrel is really where I would expect us to come back down to, which is 125 to 150 ADR today. So if we do get an ADR hit to the downside today, I'd be paying attention around 150 ADR for a pop or potential. Whenever you are looking at any instrument, whatever it is, we're always looking to the left. The only clues we have as to a potential turning point in any instrument is where it's previously reacted. Has absolutely nothing to do with where it's going next, of course, but if we are going to get a reaction, which we don't know, we have to look at where we've previously had them as to give us some guidance. So that's the only place I can think of that, or I can see on the chart, that we're potentially going to move at. That doesn't mean that we're going to do that. Obviously, what it means is there's a good probability that we will get a bounce in exactly the same way as we did here. Yeah, that's the previous support. What do we get? Limit order triggers. Limit order triggers means buys. We get in long. Same thing here. Don't know if it's going to do that or it's going to do that. But what I do know is that we will get a reaction in all likelihood at that level. So 150 ADR today on oil. I'm going to set a little trigger myself, actually, just there. So just going to set a little trigger above that 62.5 a barrel. So 61.5, 62.5, that's your area of potential support. We've got a dollar range there. And then obviously see if we get a bounce. But all the time this banking issue is happening, the market is completely undecided as to what it wants to do with oil. And at the moment it's collapsing. So you can either get on it short if you want. That's obviously a valid entry. Pull back and short. So you could get in short on this next M5 reversal alert. New Zealand dollar yen, that's an RSI alert. So you could wait for the next reversal alert short, which would be somewhere up there, to get in as a short. But I don't know. DAX is pushing, so we are coming up for the gap fill. Look at that. Who'd have thought that after a collapse that fast, we would come up and do that gap fill from there? Wow. So when we get to that gap fill, where are we going today? We've come back down into support. Yeah, so we hit the support. We got the bounce. Where to now? Tricky, isn't it? So that 150 ADR. So upside, 1-4. Oh God. I'm on these, for those of you who don't know, I've got a trapped nerve in my shoulder. I'm on these drugs and they give me blurry vision. So I think that's 148.68. Yeah, 148.68 upside. Which is basically 125 ADR to the upside. That propulsion gap is where I would expect some kind of southerly reaction. So what we're going to get now is we're either going to get that gap filled and drop, or we're potentially going to run the gap and push up to there. So that's where I'll be looking for shorts out of today, continuing the downward movement. However, obviously, it only takes one nice positive little thing to come out, and obviously everybody then starts dumping all their yen positions, putting it back into the stocks. Okay, so gap fill's coming up. Obviously, it's where that's drawn, so you can see where it is. Pound odd, ADR. Blimey, pound's on a mission today. Oh, who'd have thunk it? No news Monday. Everything's going mental. 138 people in here. We've got 65 likes. Can we get that button hit so we can see if we can get to 150? I'm desperate to get to 150 watches. Never been there. Lots of places I haven't been, but 150 watches is a nice place to visit. Unknown brother, gold. I'll have a look at gold in a sec. Just watching DAX. Just want to see if we get the fill, because we'll go with a sell stop underneath this this current candle. This is going to turn into a propulsion gap, so it's a bit of a risky sell because we're setting straight into potential support. But if the gap fill, if we're going to do a gap and run scenario, then I think this is where we are going to run from. However, what we might get is obviously a continuation up into there, in which case obviously that trade idea doesn't work, which is why we use stop losses. Okay, I'm long on the DAX. Just going to cancel that pending because I'm long now. So this is the pre-market high break. So this is the opening range breakout to the upside this time on the 5-minute opening range. So there's your 5-minute opening range candle. So this is taking that 5-minute opening range break. Not a very, very good trade at all. In fact, this is a terrible trade. Jesus, all my profits gone. Look, giving it all back this morning. Buying straight into a gap fill. That's ridiculous. That's a stupid level. Stupid. That's a grade stupid trade to take. Hopefully people will lose their jobs in the city and Wall Street, so real traders take over the market. Trouble is, if that happens, there's no one left to move the market. That's not going to help. Morning, Miora. Thanks for the likes, guys. 141. We're nearly there. Jonathan, what happens in the boot camp stays in the boot camp. Yeah, we should have a little what happens in fight camp stays in fight camp. Okay, so the 5-minute opening range short order is re-entered. I'm just watching this long. I don't like this long at all. We're extended and I'm going long straight into a gap fill. So I'm just watching this one because it's not my favorite trade. Pound New Zealand, ADR. Bitcoin is breaking out. Is it? So you know what's going to happen, don't you? Bitcoin's breaking out. What's everyone going to do? Along it. What's it going to do? Collapse. It's linked to the indices. I keep hearing your voice. Today's buyers are today's sellers. Today's buyers are today's sellers. Soundbite. Nearly at the gap fill, so I'm just watching this. I will do some analysis on all the pairs, as I said I was going to do about 40 minutes ago. However, whoever said Bitcoin was breaking out, woohoo, get ready to sell. I didn't get stopped out on a pullback, Jonathan. I went long. Oh, right, okay. Stop loss was changed just above the 200 EMA on the 1 minute. Oh, blimey, you're trading crazy. One minuet it's put in there. Look, the 1 minuet chart. As if it broke that level. Validates the trade idea short. Okay, gap fill's done. Blimey. So I'm watching this propulsion gap. 125 ADR upside on that one. Obviously on this one, it won't be 125 ADR upside. A bit higher. So looking for a trade up into there for short Bitcoin. I skipped the DAX today. It was so confusing. It's always confusing. There's no point in skipping it. If you're confused about which way to go, Nicola, then you should be trading something like the opening range breakout with the opening range breakout EA, because there is no confusion with it. There's your pre-market 15. Yeah, it either breaks it long or it breaks it short. There's nothing to think about. You can't get confused with a strategy like this. There's your 5-minute range. It either breaks it to the upside or breaks to the downside. You get in. Simples. If you look at yesterday on the DAX, you will be confused, because yesterday has got nothing to do with today at all whatsoever. What happened on Friday has no bearing at all on Monday, because today is a different day. There's different conditions. There's different stocks need to be bought. There's different banking situations. Yesterday's got nothing to do with today. It's a new day. 141. Look at that. 9 away. We always get to 142. It's like always about 142 watchers. I think Google's the YouTube's algorithm goes, he's nearly there again, boys. Quick. Don't put him at the list. Don't put him at the top. 146 we peaked at then. That's annoying. New Zealand dollar CAD coming down. I'm not sure you talked about it. Just joined the live. No, haven't talked about anything FX yet. I'm going to do the FX overview in a minute. I'll go through every pair and just have a look at them all. Do you prefer indices or Forex? Forex. Well, indices, both. How's work on the new EA going? Haven't done any more. Haven't had a chance. I don't get a chance at the moment. Literally, I'm in here 8 hours a day streaming. I don't get a chance to do any work at all. It's pretty much break even. It's $100 loss on this trade. It's pretty much break even, so I might take it. Just leave it as it is. I'm quite surprised that's actually managed to get that much room through that gap, but a lot of people are going to be buying, going to be selling this fill now, so just be careful. If you've got the reversal alerts indicator, that would have been a structure break there. If you look at the M5 on DAX, that's a reversal alert. So, but you're obviously taking it straight into resistance. So, we'll be looking for some kind of retest if that is going to break long today. But I'm quite surprised we've done that, to be honest. I was expecting it more of a sell-off with what's happened with the banks over the weekend. So good on you, DAX. Well done. Yeah, so I haven't got any further on the sentiment EA, if that's the one you're referring to. The sentiment EA is still running, but I haven't had a chance to set it up or do anything with it at all. It's still going. Functionality-wise, I've just got to change it, but I haven't had a chance to change anything on it yet. Oh, already banked this morning. Oh, already banked this morning. Oh, already banked this morning. Oh, we're banking everywhere. Love it. Right. So I'm just trying to this is a new account. I'm just babysitting it. Look, giving all that profit back this morning. I should have just stuck with that initial trade. So I'm going to go short anyway on the 5-minute opening range. I just kind of want to take 8,000. That's good enough.
Thanks for the follow.
Sell stop. I'm just going to put a sell stop in if we push down. I'm not convinced this is actually the right place to sell from yet. I think it might be up there, but I'm going to give it the benefit of the doubt. We just had a reversal alert, so I'm at least looking for a retest on the reversal alert to form that W pattern push. So I'm going short. Thanks for the follow, guys. Romompok. Ro Mopok. I can't say your name, sorry. Roro, I'm going to call you. Rodolphus, welcome aboard. 150. Ta-da! You saw it here first. We have 150. Thanks for the follow. We have 150. Oh, now we're down to 146. That's because they saw me. Everyone left. Scruffed Investor. Good name. Scruffed Investor. Welcome aboard. Tim, really impressed how the H4 M15 timeframe for the MRA, the 15-minute just waits until the market is really ready. As a result, though, it's all this banking crisis, I'm still not in too heavy in my long indices trades. No, don't want to get in too heavy. I'm 0.5% at the moment. Normally on an EA evaluation, I'd be in with 1, but I'm not today. I'll manage them as per the drawdown regime when I need to, and still make decent sized profits on the single entries. Teeny weeny stakes. Yeah. So you're going to sell coffee mugs on your site and start to pay the server bill? No. I pay my own server bills with my own stuff. Durpin, good morning. Morning, Steve. Anna, good morning. Right, so short on that, let's do some analysis. Because if I don't watch it, it'll just go straight down and make me a grand. So let's do something else. So ADRs we've covered, it's all yen based so far. We got pounds rallying as well. So all the pound pairs are starting to move as well. So just be careful with these mean reversions. I don't know whether or not these are going to push back up. I get the feeling possibly not. However, if they do push down and we get really extended, there's a very high probability we will get a reversion on them at some point. So I'm just not quite sure whether we're going to have another one of these 200, 300 ADR days. So up to you if you want to take them. Some of them I will be getting into. So running through all the pairs. 4 hours, we haven't got any. Hourly RSI extensions, we've got a couple, basically yen pairs again. So just, it's all yen at the moment, as we know, right? Morning, Mariam, or rather evening, Mariam. Morning, afternoon, Paul. Oh, why is everybody in different time zones? This is confusing. Hi, Sheros. Just joined. What's going on? I'm just about to do an FX analysis. It's evening in Australia. Looking for Germany 40. I can't find it on Pepperstone. Is there another name for it? So on Pepperstone, it's called Germany 30, or it's called the DAX. So you might find it is called the DAX. It's either quite often it's called Germany 30 or Germany 40, or DE 40 or DE 30, or it's just called the DAX. It will be there. Well, in Pepperstone, yeah, it will be there on Pepperstone. Should be anyway. Server bill, don't talk to me about server bill. Mine just went up. Grr. 4 dedicated servers and 4 cPanels. Grr. Japan bank holiday today. Nope, tomorrow. Japan bank holiday. Oh, it might be today. I don't know. It is tomorrow. It's not today, according to Forex Factory, but it is tomorrow. Right. So, going to whiz through all the FX pairs. Buy a scorecard at the moment. So, looking at longs and shorts, the only thing really I would say you want to be focusing long only on is US dollar CAD. There is sentiment long and there is a bias long and short on quite a few things, but these are mainly being driven by retail sentiment a lot of the time now at the moment. So you have got some COT biases. Pound specifically is a very strong sell against the US dollar, but this is all at the moment. It's all very, 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 very up in the air. Yeah, everything that's going on with this banking crisis at the moment, and with Putin now having an arrest warrant on him, at any moment it could all go very, very wrong in any direction. So just kind of stay in line at the moment with whatever direction things are trending in. So from a fundamental bias perspective, the only thing I'm really concentrating on longs is with the euro at the moment, and potentially with the US dollar, although the US dollar is hitting terminal rate. So I think we've got potentially a 0.25 left in the US dollar. Pound, we've got another 0.5%. Swiss franc, we've got another 0.5% at least. And the Swiss franc, that will be going up next week. If you look at this week, if you look at the forecasts, we've got 1.5 on the Swiss, the pound 4.25. I think we've got another 0.5 in there over the next few months, but we will see how things go. And obviously the Fed fund rate going up to 5. That's potentially got a 5.25 on it, but these are all going to be driven very much by unemployment figures. And obviously, as long as this stabilizes, or we got tiny increments to the upside, but mainly to the downside, as long as that is going in the right direction, it gives them the opportunity to stop doing that, which is why I think we're seeing with the COT all sort of coming down into a more stable level. There's nothing that's really, really long, nothing that's really, really short at the moment. So just be aware of it, though. Check it regularly. The main thing driving at the moment, though, is retail. So I've got a sell stop ad there, which I'm taking straight into support, which is great. I'm thinking gap fill bump, but we'll see. We will see. So starting at the top, Aussie dollars. So Aussie dollar CAD is a massive flag on a move up at the moment. So we've had this big, strong push flagging for a potential long. However, the Australian dollar isn't doing particularly well at the minute. We're up to 3.6. We're only going up in 0.25s. They keep pausing it. Inflation is going up at 0.5%. Really bad. Their unemployment, however, is coming down. So that's good. But with this sort of inflation figure, it's going to put more pressure on interest rates. And they don't seem to want to go anywhere but 0.25. So there's not a lot of faith at the moment in the Australian dollar. So I'd be looking for drops on that. 160 people. Let's go. Woohoo! Keep pushing the like button. So my target now is 200 people. And then it'll be 2,000 people. And then it'll be obviously 1 million people. And then I'll have one of those plaques and I'll go on tour. And, start earning millions from YouTube. Then I'll stop trading. Then I'll start selling courses. And then I'll become Greg Secker. Aussie dollar CAD. So yeah, at the moment, basically, it's nowhere. It's mid range sort of thing at the moment. Sorry, on the RSI, it's mid range. So I would be happy at the moment really to take it in any direction. As you can see, I've had a couple of nice longs off of ADR extensions, which has worked very, very well. And these are 4-hour extensions as well. There'll also be hourly extensions. It's the same stuff. As soon as the market gets stretched, it has to pull back and take profit. That's what we do. We revert with the banks. So all the same stuff. At the moment, we're nowhere, as you can see. So there's no opportunities. We had a short opportunity come in on Friday. You got a lovely M pattern that's played out. So if you took that one short on Friday, well done. You're in and out and done. It's come straight out of that propulsion. We are being held down at the moment, as you can see, by that move. Tested it, tested it, tested it. Doesn't want to go higher. Canadian dollar should power up along with the US. However, the US is a little bit weak. So it could go either way. So either way on this, I'll be just waiting for extensions on the hourly or wait for any ADR hits. If we get any ADR hits to the upside on Aussies, they'd be good shorts. But as you can see, it is more of a short than a long at the moment. So it's something I would look at shorts on more than longs. However, the longs have got just as much chance of working. So, but you can see here on the 4-hour, you haven't really had any decent opportunities. It hasn't had enough strength to get those pushes. So you need to be concentrating on the hourly, which is where my focus really is at the moment. ADRs are really contracted at the moment. So all the time we've got weak. Look at that, 155 pound New Zealand. That's ridiculously weak. So yeah, all the time we've got tight tight ADRs. We're going to find it much harder to get 4-hour RSI extensions. So the hourly is your best bet. So anything gets extended like this on the hourly, dropping down into M5, waiting for the reversal alerts, and taking the reverse alerts the opposite direction. So Aussie CAD, either way. Aussie Swiss. Now at the moment, obviously with this, I got caught in this squeeze on the Swiss franc, as you can see. I'm out of it now. But the Swiss franc basically is a difficult one from a direction basis, because what's going on with the Credit Suisse, with the Swiss National Bank having to step in, and with everybody having to step in at the moment, the normal money movement through the Swiss franc is going to be a little bit less than normal. So it's difficult to tell whether you're going to get any strength in that Swissy. So you'd have to kind of look at it as a short at the moment. If you look at the fundamentals on it, COT-wise, they are short. Yeah, so 58% of the market is short on Swissy at the moment. That was shorter, and it is starting to come back in now. So there is more money coming back into it. So there's no bias long or short. And again, very, very similar scenario at the moment with this one. You can take it long or short. This is a 4-hour RSI extension. So in theory, there was a nice short there last week on M15, which is this morning, really. You would have had a reverse alert in here as well, though, which got invalidated on Friday. But I'm not sure you really want to be shorting against the Swiss franc necessarily at the moment, because as soon as this banking crisis gets solved and they finalize, UBS finalize the paperwork, that's going to give people a lot more confidence back in the Swissy, and potentially that obviously will come back down again. So forget that one. So it is a short at the minute, but at the moment we've got this bank thing hovering over us, so it's impossible to tell which way the Swissy is going to go. And as you can see, when the Swissy moves, the Swissy moves. If you're going to get squeezed, all my worst squeezes I've ever had over the years have always been Swiss franc related. US dollar Swiss was the worst squeeze I ever got into before Christmas 2021. Can't remember which squeeze it was. I've been in a few. It's back here, I think. It's that one here. Is that? No, it wasn't that. Is that where it came out of Christmas? No, it wasn't that one. I can't remember which one it was. It was Christmas, though. I remember. Oh, it's here. This one here. This was it. When was that? 20. Yeah, December 20. I got in here looking for a long opportunity, and got caught in that. And again, it's the Swiss franc. The reason for it was a little bit of uncertainty in the US. We didn't get the expected break to the upside we were expecting on it, and the Swissy suddenly powered up. When the Swissy goes, it goes, and it just moves so fast, so hard for a prolonged period of time. You just get stuck and stuffed with it. So just be a little cautious with all these Swissies. The market is always jittery when the Swiss powers up. When the peg was removed from the Swiss franc and we had that collapse and it put all the brokers out of business, after that, many people said they would never trade the Swissy again. And then the Swissy is a little bit like gold. It just goes nuts for no reason. So I would be cautious with it at the minute. However, it is tradable in both directions at the moment. But, which way do you want to be trading this one? Down, isn't it? Yeah, so you really want to be looking for short opportunities, and that is your short opportunity there. So I kind of like it short. The entry was on this morning, basically, was your entry on M15, and it's just retested that level now. So market structure is breaking to the downside. Target initially down there, that accumulation 175, and then I would say we're probably going to break out the lows. But this is all based on speculation as to what is not going to happen with these banking problems. So Aussie dollar yen. Coming down to retest the lows. Again, yens, I'm going to cover all the yens quickly now. Haven't got a clue. Yeah. Yen is a safe haven currency. In times of crisis, money flows into the yen. We are in a time of crisis. Who knows what is going to happen with the yen? So there is a very high probability of some very nice mean reversion plays. Yeah. Shorted it. I longed it there. Worked absolutely fine. One more bank falling over, this comes down. Another bank falling over, this comes down. Before you know it, the yen intervenes and that happens and you're stuffed. So if you're going to trade it, I would say if you're going to take ADR reversals on it, fine, take them, use stop losses. If you're going to position trade it, have a hybrid position trading strategy in mind where you will get into maybe 2 or 3 positions max. If you are finding yourself getting squeezed, get out. Yeah, it's too dangerous at the moment, the yen. You're going to get these, look at that. Look at this entry here. I mean, this shows you how tricky and how fast it can move. So initial entry was there. Beautiful. Look at that move. For 2 days, we had a huge drop because it's a safe haven currency. So you're always going to get stuck the wrong side of it. Again, got out, fine, took some loss along the way, would have got out probably $500 loss on the whole thing, which is not the end of the world. But that's the kind of play you want to be doing on it. You want to be getting out fast, scale out of it. Just scale out on the way down. If it moves 3/4 on ADR against you, take half of the thing off if you're going to position trade it, yeah? So I'd be much more looking for shorts than I would be for longs on the yen. And I've been saying this for months, haven't I? I'm much more interested in shorting this thing than longing it. And although the buyer scorecard has been telling me completely opposite, because of the yen intervention, I've been looking for shorts. So we are coming down to a beautiful area where, yes, we are probably going to get a bounce. I wouldn't necessarily expect us to get much of a bounce before we drop again. And if we get another bank fall over, that is totally irrelevant. It's technical, doesn't matter. Fundamentals trump technicals all the time. So it will just collapse. So be careful down there. Aussie, New Zealand, this is a trick. Oh, sorry, I was going to say I was going to cover all the yens, wasn't I? So it's the same principle with all these yens, yeah? Same thing. I'd want to be shorting everything yen, everything against the yen, i.e. yen strength at the moment. Look at the levels. Those are potentially where you're bouncing from. So again, if you're going to get in now, fine, get in. If you're going to get in again, take a second entry there. If it collapses down below there, scale out, or shut. Yeah, take a loss. Or better still, just forget the yens for the minute. That's your best thing, isn't it? We've got 28 Forex pairs. We've got multiple indices. There's lots of other things to trade, yeah, that are not going to be affected by a bank falling over. Everything else is going to be fine. That's not. Unless it's the Bank of Australia, then the Australian dollar is going to collapse. There's all sorts of things that were going to happen. If the Bank of Australia falls over, we're in all big sorts of trouble. That's a central bank. So that's not going to happen. If it did happen, that'd be a big problem. But yeah, so be careful, all of them. Swiss yen, they're all approaching levels where you'd be technical traders thinking, oh, this looks good. Technical traders get run over by fundamentals regularly. Yeah, so just, look, is it even bothered about this level? No, it's just not interested. There's plenty of levels we've got, coming up, which look beautiful. Yeah, it's just, if we got, right, so this is one thing I would say. If we get a 200 ADR move to the downside, then yes, I would be all over that like a shot. That's going to be extended on the 4-hour, extended on the hourly, the M15, you're going to be down below 5. Yeah, it's going to be absolutely stuffed. That I'd be interested in taking. 100 to 125 ADRs, not today. Not with what we've got looming over us. So just look at levels. Yeah, every time you think about getting into it, remind yourself what yen intervention does. Yeah, what can happen when the yen intervenes? What can happen when we have a safe haven run? Yeah, just remind yourself, 225 ADR is a drop in the ocean. So be careful. ADR hits to the upside, however, I'm interested. Yeah. So just be careful. I am mean reverting that one. That's the US dollar. So US dollar is a lot bigger, a lot stronger potentially. So money flows into US in times of crisis as well, as long as it's not the US involved. So you'll find money coming in here. So this, as you can see here, this is the one where when it is an issue, look at how little this moves in a crisis compared to the rest. And look, 1, 2, out, in, out. Much easier, the US dollar for mean reversion against the yen. So that's the only one I'd be interested in. The rest, I will take others on the others, but they've got to be pretty extended. Aussie New Zealand. So Aussie New Zealand obviously is at the moment it's a short long term. So we are playing this mean reversion pullback. This trend continuation pullback at the moment. Yeah. So this is where I said I'm interested in shorts. I'm really interested in shorts, and I kept getting interested in shorts until it went down. And now obviously it worked out. So this is the move that we're looking for. New low to be challenged down there. Yeah. Aussie down, New Zealand up at the moment. Again, sentiment wise, New Zealand dollar, 57% of the market is long on it. 59% is short Australian dollar. Aussie New Zealand is a short. Yeah. So I got stopped out on that, didn't I? So yeah, like it as a long down there because it is a nice pullback potential from here. We've got a nice double bottom going on at the moment. So this is an H1 M5 mean reversion back up into here somewhere, lower high, drop, and it's double bottom basically. So we're looking for that though. So pull up into there and then push back down again. So we're looking for shorts on it. Overall, you can mean revert it obviously, but I'd be looking, you know, your shorts are going to be, look at the, you know, there's a perfect example look here on the screen. Yeah. Long, needed to, out. Short, straight out. Long, that one worked. Long, that one worked. Long, that will work. It's fine. But you're going to get into more positions trying to mean revert long on it than you will shorts. Your shorts are going to be much easier. It's the path of less resistance, yeah? So when you're position trading, you want to look at the path of least resistance. Those are going to be better than those. But, you know, as long as there's market structure, it's always going to push up, isn't it? Yeah. Profit take. Banks, profit take. Bank, profit take. Bank, profit take. It's just the ebb and flow of the market. Aussie US. So you can see this one, we are sort of flagging up a little bit. The US dollar has had obviously a bit of a spell of weakness with what's going on. The Aussie's trying to make a bit of ground, but I'd be looking much more for shorts on it. There's a lovely short on Friday from there, and I've just got out that one this morning. Look, so mean reversion down to there. There was a long there, ADR hit, reversion. There was another long there, which was massive. That was the big one down there. Yeah, big drop straight out into propulsion. This is what I mean, yeah, with these yens. That's the sort of thing you're going to see happening when you get a yen intervention. Obviously, this is the US dollar, but not the yen, but that's the sort of movement absolutely is achievable when you get a safe haven run. Yeah, money's flying into the US dollar at a rate of knots. Yeah, that was 167 pips of a move on an 85 ADR. So 200 ADR, you know, so when you're looking at these yens going, oh, they're stretched. No, they're not. They're on their way to getting stretched. So there is every chance of a much bigger move today coming. CAD Swiss. So yeah, CAD Swiss obviously is a big short. That's what happens when you try and long a short. You get hurt. However, what this was more of a range bound move. I was expecting to power up. I was expecting Canadian dollar strength along with US dollar strength. What we actually got was Swiss franc rallying hard. So this one at the moment is a very tricky one to take in any direction, really, because we don't know what's going on with the Swiss franc. In fact, I might as well whiz through all the Swiss franc pairs. I've done all the yens in one go. I might as well do the Swissies. What happens to the Swiss franc at the moment is based on what is happening with Credit Suisse. Credit Suisse is the biggest bank, obviously to do with the Swiss National Bank as well, where the vast majority of the money flow from Europe goes through. And we've got a big problem at the moment. So this could go any way. And it's literally just going to take news events. Trading in shares of the company will remain suspended until further notice. Evergrande, they've suspended trading on. What's Putin doing? Putin will provide Z with clarifications on Russia's point of view on Ukraine. What does that mean? So yeah, so we're watching this basically. The next red news that we get coming out like this about the banks the Swiss franc is going to fly to the upside or fly to the downside. We don't know which, do we? So all of these you've got to be careful with. So if you want to get into them, RSI extensions to the upside or the downside, both of them are playable. However, if it's gone like that, yeah, and you get an RSI extension, just think, do I really, really want to stand in front of this moving train? Yeah. If it's moving fast and hard and you get a huge hourly candle put in, go and look at the news, for God's sake, and think, right, why is this moving? Is there any news? No? Okay, it's just being manipulated. That's fine. If there's news, don't get in the way of it. Get on board the train, yeah? If you're not already in it the wrong way. So yeah, CAD Swiss, loads and loads of upside targets on this still. There's loads of upside targets. We are filling them, and there's every opportunity we're going to come and do a V-shaped recovery on this move. But it's going to take something solid about the takeover of Credit Suisse and getting that resolved, and for the entire banking sector to say, no, we're fine, don't worry. Not necessarily going to happen, is it? So, so all the Swissies, Euro Swiss, yeah, can take it in both directions. Absolutely fine. No problems taking this one in either direction. This is a very, well, normally it's a low ADR. It's normally down in the sub 60 level. We're up at 80 nearly at the moment. So it is volatile at the moment, obviously, as you'd expect. Huge propulsion gap target to come and sort out down at the lows, but we've got this one at the highs. Bang in the middle. Could go either way. Yeah. So if you're going to position trade this, you can scale in any time you like on either a short or a long. However, again, bear in mind, when the Swiss franc is moved, the Swiss franc is potentially going to fly in one direction or the other. So if you get into it here and it starts to push up, you're going to need to scale in all the way up to there, and then you'll get out. If you're getting it long for any reason, you're going to need to scale in it down to there and get out. Yeah. At the moment, we're nowhere, are we? There's no signals on it. There's no entry opportunities on it at all. So we're sitting waiting. Pound Swiss, same thing. This is sideways. ADR is 96, pretty good ADR. Trade it in both directions at the moment. At the moment, it's a short only though. Yeah, so we want to be looking for shorts. We're up at a resistance. We've got that level up there as well to watch. So this propulsion gap here, out of this accumulation, this whole thing is one big propulsion gap. That's what started that move down and broke that low. Now we've put in a new lower high, lower low. So market structure has shifted south. So I'd be looking for somewhere literally around there if we're going to continue that structure to the downside. However, there's high probability we'll push up. So if we get a 150 ADR on it, that would be a beautiful entry, because then you've only got sort of just under an ADR to come up to that level before you're likely to find limit orders triggering up there. As soon as those limits trigger, it's going to push it back down. So you get an extension and then a pullback. So looks good for shorts. I want to short the pound Swiss. I'll be wary about longing it. Look what happens when you long it. So just be careful on that. I'd be going short more than long. New Zealand Swiss, same thing. I'm much more interested in shorts than longs. There's a short on it at the moment, which is a pullback out of here. This is an H1M5. So there's your hourly RSI extension. Your entry to go short was in here. Well, it's that candle there, basically, is a break of that low. Somewhere. Don't know. It's in here somewhere. Anyway, as you can see, it's there. So structure's broken to the downside. So short. And I continue to take shorts on this, all the way. US dollar Swiss, this is the more tricky one. US dollar Swiss is always either range bound or in utter chaos. So I hate this pair with a passion. It's always the one that catches me out. So either way at the moment, but look at the RSI extensions we get on it sometimes. This is a combination of when the US dollar is, when the Swiss franc is squeezing, normally the US dollar isn't. This is why we get these massive moves. When the Swiss franc is having a crisis, normally the money is flowing into the US. This is why this moves with such volatility, because you've always got usually a push and a pull happening at the same time on this thing, which is why it gets moved around so much. If it's a safe haven run, you quite often get money moving into both, which is fine. Then it does this. However, when it's a safe haven run because of something caused by that, obviously it goes massively tonto in one direction. Nothing you can do about it, but it's volatile. When it gets volatile, it gets volatile. So for our RSI extensions and hourly RSI extensions, I'm much more interested in longs on the US dollar than I am shorts. However, at the moment, it's not really got the strength, has it? We're reaching terminal rate on the US dollar. There's every opportunity that this week is going to be terminal rate. We're going to see that 5%, and they're going to turn around and go, nah, that's it. That's it. We're happy. We're happy at 5. Inflation is coming down at the joint fastest rate through the G8, G7, G9, however many. It keeps changing because people start wars. But yeah, it's coming down at the fastest rate, basically, across the developed world. The GDP is dropping, but that's because obviously they've been driving inflation harder than everybody else. They had got on top of unemployment. However, that has started to squeeze up. So I think we're basically where we need to be with it, which means that moving forward, there's likely to be more neutrality to weakness in the US. And you can see that creeping in on the COT report. Yeah, 65% of the market is long. We're gradually dropping, but the market is always going to be a little longer on the US dollar than it is all other currencies, just because it's the world's currency. Most of the transactions happen in this currency. So I would always be looking more for longs than shorts in it. So right now where we are, obviously it's not of any interest whatsoever. That's where it was interesting. Or rather, that's where it got interesting. And then we had that issue. So I've been looking for longs on that one. But you can take it either way, really, at the moment. I say everything pretty much you can take either way at the moment. Covered the yens, euros. So euro at the moment, euro is a very tricky one at the minute because we're waiting to see what happens with the euro rates. We've had, obviously, last week, we had the euro rate increase. We went up to 3.5 as forecast. There was an awful lot of talk about a 3.25 or a freeze. We didn't get it, which is great. Lagarde came out in the press conference and was fairly bullish. She's talking twice this week. So I get the feeling that we should be looking for longs on the euro. The fundamentals for the euro are all okay. Unemployment isn't going up. Inflation isn't going up, but nothing is going fast enough. And I get the feeling we're looking at a 4.25 over the next couple of interest rate rises. But we need to keep our ear to the ground on this one. So I'll be looking more for longs than shorts on everything euro at the moment still. So euro, as you can see, nice looking long opportunity, but it's not really strong. Nothing is really strong at the moment. There's nothing really strong. As long as the market is moving like this, it doesn't matter which direction it's moving in. You're always going to get opportunities to get out. So in theory, you can really take it in either direction. I got into a bit of a squeeze shorting the euro odd here, as you can see. But nice easy exit at the end. It's just a case of you probably will find you get easier trades going long than short. So any extensions to the downside on this are much more attractive, i.e. here. That long that I took on, when was that? Wednesday last week. So boom, in, out, ADR extension to the downside, pop up. Yeah, it's pushing nicely. So it's a case of just waiting for opportunities. Just missed a 4-hour RSI extension there. But yeah, follow the moving averages at the minute is kind of the key message. Everything is sort of light trending. Nothing is particularly strong. So just follow the daily 24.72 and you should be okay. But, you know, if you're aggressive like me, trade in both directions. Just be prepared to get squeezed. Longs on Euro CAD. So US dollar CAD is obviously the big long at the moment. If you look at all these Euro pairs from a fundamental perspective, they're all a little bit stronger than they are weak, apart from the US dollar and at the moment against the Aussie. So, you know, it's longs across the board on COT. As soon as retail starts going the opposite direction, that will help out as well. So all of them, yeah, if you just flick through them all, apart from the Swiss franc at the moment, of course, and the yen. But everything you look at, really, it's kind of a long on all of these. So looking for pullbacks, RSI extensions on the 4 hour, RSI extensions on the hourly, and then just take the usual bounces. There's quite a few propulsion gaps to come down and sort out on Euro CAD. We're going to need some US dollar strength and some CAD strength, obviously. At the moment, obviously, a push up into there potentially first and then come back down. But I'll be much more interested in longs on it. Euro Swiss, same thing. We've looked at that one already. Euro pound, we are sideways at the moment. This is usually a fairly tight ADR pair because the pound and the euro move in sync. At the moment, we are sideways on it. Again, you can trade this one in any direction. I'd be more inclined to say that we will be seeing, longs on this. However, at the moment, we've got quite a lot of strength coming through on the pound. Since the budget, the market seems to have rallied a little bit on the pound. But there's still nothing going for it. Yeah. Our interest rates we're whacking them up, and we are not getting on top of that in any shape or form that is fast enough. Our unemployment figures are stable. Our GDP is forecast to be either recession or flat for the entire year. And we're putting interest rates up, and inflation is still not being brought down. Last quarter, we had our largest inflation drop, however, down to 0.4. So the market isn't going to really give any confidence in the pound until they see this happening on for a few quarters in a row, and that being stable. Yeah, all the time that's flying up and that isn't flying down at a rate of knots. I think we've got a weak pound. But market seems to be fairly bullish on it at the moment. So if you look at the sentiment, the COT report, there's no advantage either way. It's more bearish than bullish. But we seem to be getting these little flurries of strength coming through, as you saw there. So big propulsion gap to fill to the downside on the 4 hour on this one. Hourly, as you can see, it's all over the gap, basically. So take it in any direction you like, really. As long as we're moving, there'll be an exit on it. So I'd much rather be taking longs than shorts at the moment. But, it will catch you out with a weak euro and a little bit of a strength in the pound. But overall at the moment is ever so slightly bearish. We've just moved that back down below the red, but we did it there, then we did that, then we did that. So all I really think is happening here is a pullback and come up, re-challenge either that high there or that high there. So much more interested in longs. Yen I've covered. Euro New Zealand. So this is a big old ADR. All New Zealand pairs are big ADRs. You can see how well this is moving at the moment. It is literally just a chop fest. Yeah. So every push we get a lovely big pull. Every pull we get a lovely big push. It is just beautiful. In, out, in, out, in, out. So it doesn't matter which way you take this one at the moment. It's a range bound pair. So 4 hour RSI extensions to the downside. You can see there's one in there. Yeah. Long, out, short, out, short, out. Yeah. RSI extensions. Just doesn't matter which way you get in at the minute. Obviously, at the moment, I'll be much more interested in longs back up into propulsion areas than I would shorts. Doesn't matter either way. It's very, very choppy. So 4 hour extensions, hourly extensions, ADR hits. Great pair to trade. Euro US dollar. So this is obviously the Dixie upside down. It's sideways at the minute. We're back into this area of balance. So we had this nice area of balance. We were happy to transact here for an awful long time. We did a price discovery downside twice and failed. So then we went price discovery to the upside and the market was happy. Then we had FOMC and unemployment, and we've pulled straight back down into balance again. So there's not really any directional bias you can say on this one, long or short, strong. So at the moment, the market positioning on it is long the euro and long the US dollar. So there's no COT bias advantage at all. The fundamentals are better for the US than they are for the euro at the moment. So that's a slight negative. Retail is flat. So there's no real indication as to any directional bias on this at all at the moment. So what you're probably going to find is it's going to get pushed and pulled around with retail. If retail starts shorting it, it will go long. If retail start longing it, it will go short. And if we get any banking issues, we'll probably get a pump into it. So on that basis, pump into the US dollar, meaning shorting it, obviously. So on that basis, shorts are stronger than longs. However, it's pushing and pulling in both directions equally. So I don't think there's any real issue in taking that either direction at the moment. As I say, with most of it, most pairs at the moment, there is no real huge bias in either direction. The whole world is stuffed, therefore everything's moving sideways. Pound odd, again, short bias pound at the moment. From a fundamental perspective, from a COP perspective, from every perspective, it looks like the pound is a short. However, the pound is holding its ground very, very, very well. Primarily, I think, obviously, because it's partly to do with the banking sector. We are the head bank, if you like, or head country for banking. So we've pushed straight up on the pound odd into resistance. We're holding. If it pushes through that, fine, just wait for the pullback. Yeah, so RSI extensions to the upside are going to be more difficult, I think, at the moment. They should technically be easier, but they're not. So same thing, RSI extensions to the downside, RSI extensions to the upside, drop down, lower time frames, wait for the reversal alert, and then continue that structure. So I don't see any problem trading this in either direction at all. There's a couple of trades there. It's an RSI extension and out. There's one there, out, and obviously that one there needed 2 positions and out. Yeah, so profit take moves are there. It's just very nice. It's moving very nice. So either direction, but at the moment, obviously, your longs are working better than your shorts. But this is the thing about trend. Everyone goes, oh, look, it's a long. By the time you've identified it's a long, it's ready to come back down again. Why trend trading is very, very difficult to do, because 80% of the time the market spends in mean reversion, it spends in a range. So when you try and take a trend breakout, most of the time you're wrong, because there's an 80% probability of a reversion. So take it in either direction. If you're thinking, I only want to go longs at the moment, that's great. But you're going to go longs at the moment just as it comes back down to the bottom of that range. So either direction. Pound CAD, same thing. I've got a short on this at the moment. It's up at potentially what you would look at being a nice resistance. But again, slight weakness in the CAD. The CAD's struggling at the minute, oil. So oil is the main Canadian export. Oil prices are through the floor, as we looked at earlier. So we're down to nearly $60 a barrel. We are struggling there. That will change. The supply and demand issue with oil is completely the wrong direction at the moment. We've got big demand with China unlocking. You would expect with the supply constraints we've got at the moment that you would be seeing oil prices rally, but they're not. So they can't drop too much further. So at the moment, I'm short on it, but it's either way. On this one, again, if you look at it, if you scroll out, yeah, it's very, very nice, very choppy. Big squeeze there on the pound. To the upside, this is what I mean. The pound at the moment is getting these little rallies, and it flies against all the fundamentals at the moment. But I don't think it's necessarily the pound strength. I think it's more the other currency weakness, and the pound is just holding its ground. Yeah, and as soon as the Canadian weakens, all that happens is you get that little bit of a push. Yeah, so it's not necessarily pound strength we're looking at with any of these. It's the pound just holding its ground, and then everything weakening against it. Pound Swiss we've looked at, pound yen we've looked at, pound New Zealand sideways. Yeah. This used to be my favorite pair. We used to be trading this with ADRs of 350 to 450. We're trading 155 at the moment. It's dying. It's died. Trade it in any direction you like. Do what you want. It moves so beautifully. Yeah, doesn't matter. It's just always on the move somewhere. It's usually got a much bigger ADR, but push up into that propulsion gap, drop back down. No real directional bias as such on it. If you look at all the pound pairs, they're all shorts officially. So if you look at, apart from the pound CAD now, But all the pound pairs, yeah, they're all minuses. They're all more negative than bullish. Euro pound is a 0, which kind of gives it both at the moment. And then pound CAD is the only one that is bullish at the moment. But the only reason is because the market is shorting it. So you want to be going long on the pound CAD at the moment. As soon as the market decides to go long on it, that becomes a minus. So it's all down for the pound, which is what I'm saying. You know, the technicals, the fundamentals, everything says you should be doing more shorting than longing on it. Yeah. However, the pound just seems to be holding its ground at the moment. So doesn't matter which way you trade that one. Obviously, as you can see, any RSI extensions you take to the upside, you're going to get lovely exit opportunities on them. Any RSI extensions you take to the downside, you will get lovely pops. Yeah, it's just a beautiful thing to trade. If you want to pass a proper valuation, yeah, pound New Zealand is just the thing to be trading. Always has been. But at the moment, it looks like we're getting expanded volatility coming in, or it's due anyway. Yeah, I love it. Both directions. Pound US dollar. So pound US dollar is a tricky one at the minute. We've got the issue at the moment with the banks, which is causing money to flood in and flood out of the US with everything else. But the movements on this are very, very, very textbook as well. Look, up, down, up, down, up, down. Market structure is beautiful. 4-day squeeze there. There's an exit if you were to get squeezed, but you wouldn't have started the squeeze until there, which is where I got out. Yeah, so I had one trade in there, out on that extension. Yeah, so it's just easy to trade at the moment. The bias should be short on it overall, though. Looking at the 4-hour, yeah, this is what we should be seeing continue. Since Liz Truss screwed everything up and Bailey bailed us out, we had that weak US dollar. That has changed now. That's where that changed. We had FOMC and unemployment. Sorry, that's where that changed. We had FOMC and unemployment, which drove that strength into the US. Weak, strong, just sideways at the minute. As I say, I think we're getting to terminal rate on the US, which is going to make the US more of a flatline currency. And you'll see things starting to gradually beat it down a little bit, I think. But the US will always hold up well. So again, you can trade this in any direction. 4-hour and hourly RSI extensions drop down, wait for those reversal alerts on the lower time frames, take the reversal alerts when they come in, and just get out on the strength. As soon as the market pushes down, it gets extended. It has to come and do the opposite order to exit. And that's literally all we're doing, isn't it? So any RSI extensions, yeah, in, out, done. New Zealand's, so the New Zealand dollar overall, very, very neutral again, as you can see, against everything. Aussie New Zealand is the only real sell, obviously. So apart from that, there's nothing. If that flicks, you know, the market at the moment, retail, they're all longing it. As soon as they stop longing it, that becomes range bound as well. So it's fully range bound New Zealand dollar across the board. So again, RSI high alert on all these pound pairs that have been pushing this morning. So again, all of these, you can see the New Zealand's, yeah, very, very, very range bound, which is where we spend most of our time. So longing, shorting, yeah, in, out, yeah. So all same stuff, everything range bound. We just pushed up into the propulsion gap there. So that's just being rejected at the moment. There's a sell order from Friday just been completed this morning on H1M5. So that was the hourly RSI extension, 5-minute reversal alert out. So yeah, same stuff. With this one particularly, the pound CAD, obviously it is very, New Zealand dollar CAD. It's very strong at the moment based on what's going on with oil, all these oil prices. We are really having a weak CAD. That, I think, is going to change at some point very soon. I can't see the market wanting or being able to sustain $60 a barrel on oil. It seems remarkably cheap with what's going on in the world at the minute, but it is. So I can see only really one way for oil, and that is up or sideways, in which case then that strengthens your Canadian dollar, which will bring us back down to come and do that at some point. So we've tested that nicely, push back down into there. Potential there is obviously for more movement upwards to come back up and retest this area somewhere up there as well. So there, we could have another few days of up, or we could just pull back and sit. Could go anywhere it wants to, doesn't it? But at the end of the day, just don't get in unless you've got an extension which the banks are going to profit from. So just sit and wait. New Zealand Swiss we've covered, New Zealand Yen we've covered, New Zealand US. We're up at a resistance which has bounced beautifully. So yeah, shorts back down into propulsion. So somewhere into there, we could get a bounce. We could get a bounce out of there as well. Obviously, we can come down and stay within our range as well. So, I don't know, but I'm short at the minute. This is the thing that is worrying about this one. The fact that we haven't touched this propulsion. With a lot of these, we have. We've done this propulsion gap. We haven't managed to do it on this one yet. So there's plenty of upside potential, as you can see on the 4 hour. However, when you look at it long term, again, same as the Aussie New Zealand, we're in a pullback potentially for a move back down to the downside. So I'll be looking more for shorts than longs. But again, everything at the moment you can take in both directions. Look at that beautiful extension on RSI and on ADR. That would have been an ADR hit straight in 3-day hold out. But yeah, either way on that one. US dollars. So all the US dollar pairs, if you look at them, they are all, most of them, a long bias. So obviously everything against the US dollar is looking like a sell. Everything US against something is looking like a buy. US dollar Swiss is range bound. New Zealand US is very range bound, but more bullish than bearish at the moment. However, I think over the next few weeks that's going to change. So I would be more inclined now to say with these USs, we're probably reaching terminal velocity and we're going to start to see some sideways movement coming in at the moment. So again, don't really see a problem taking this in either direction. US dollar CAD is much more a long than a short. It's the only one on the buyer scorecard which is a real strong buy. The fundamentals are better. Unemployment is better. COP is better. Retail at the moment, everybody's shorting it, so it's going up. So yeah, lots of reasons to basically be longing this rather than shorting it. However, it's kind of flagging at the moment. So big propulsion gap targets to the downside still to sort out. That's been tested multiple times on the next day and we bought out of it and then we had spike. So up there, shorts, longs from there. So just waiting really for any kind of signals on it. And you can see the shorts that I've taken on. I've only had short signals on this because it's been pushing up. So short there, had a short there, second entry, out, short there, in and out. Yeah, so it's all the RSIs. So yeah, US dollar CAD. Be looking for longs on that one. US dollar Swiss, I've covered that, and US dollar yen I've covered. There we go. That's everything. Gold, I don't trade, but at the moment, obviously it's a safe haven, so it's through the roof. Good luck. I don't know. I haven't got a clue. What's happening with the banks, basically? So forget support resistance is irrelevant. I mean, obviously, I would normally be saying this is potentially going to be heading up there, but you've no idea where it's going. It's all to do with what's going on with the banks. Hell of a rejection candle at the moment, though. That is a shooting star, huge shooting star signal to be taken as short. But look how embedded we are. Yeah, do you really want to be trying to get off the train there? I don't know. Thanks for the follow. Sorry, I missed you, Jashan. Welcome aboard. And Mexcalibur, assuming you are a King Arthur fan from Mexico. Yeah, so nice looking short opportunity. 4 hour RSI extension. You're about to get a 15-minute reversal. You've had a 5 already. So yeah, you can obviously see it is coming down. So structure's shifted to the downside. You want to watch this area here, which we are slammed through. Yeah, so if we do get a retest, we'll be looking for that M pattern. So you could get in again there if you missed it. But yeah, wary of this. Again, same thing as everything. Same with all these yens. One more bad bit of news about the banking sector. Off we go. Yes, but from the UK, Excalibur, yeah. Right, that's all that lot covered. Oil is down again. I would be looking at this this morning. I was thinking, but I hold my previous analysis. 150 ADR. That's my alert there. That's where I'd be interested in long on oil. I've been chopped to the death on this morning. I am long at the moment with $700 and $800 of profit, which is nice. But I've given all my earnings back this morning. So remember what I said this morning? This is where I said we were heading to. And that's where I'm expecting to find those sellers. 125 ADR just above, so it's up there potentially. Watch that level. I might close that out actually. I'll leave it for the minute. Right, let me catch up on the chat. 160 people, so that was good, wasn't it? So we have hit our 150 target, which is awesome. 164 is a new record, yeah. Lambo Lee, yeah, that's me. Oh, what a great name, Lambo Lee. I like that. If only. I wouldn't want a Lambo, to be honest. They're too expensive. Porsches are expensive enough. Every time Porsche goes into the garage, it's £2,000. Literally, twice a year, goes in the garage. Twice a year, £2,000 bill. Doesn't matter what it is. There's always something which costs $2,000 on a Porsche. I'm just going to close it out and bank it. Sellers are starting to enter up there. We are quite extended on that move, so I'm just going to bank that one. I'm going to also cancel that sell stop off for the moment. So ended up coming out of this morning with $300 measly. Yeah, they're expensive cars. Put a stop loss on your watches so you don't lose any money. Yeah. Stop loss on watches. If only that was possible. So this area that we're testing at the minute is that high from the close on Friday. So there's not really any relevance in it. That's where I'm expecting us to find our first set of sellers, and potentially up there as well. We might find some more. That's going to involve a hell of a move, 150 ADR. The market seems to have some confidence in this bailout at the moment by the looks of things. So looking good. What a move this morning though, crikey. Wouldn't have expected that. I certainly wouldn't have expected to be winning on the long moves this morning. The shorts were my expectation, but that's the market. That's what it does. I'm stuck in CAD Swiss for over 2 weeks now. Miura. 2 weeks in CAD Swiss. Yes. So I'm out of CAD Swiss. But yes, I was stuck in CAD Swiss, as you can see as well. Everybody was stuck in some kind of Swiss. So this is a really good example, yeah, of a squeeze. So this is a squeeze, obviously. This is a 1 week squeeze. And this is why, have I got anything on that's got multiple positions in? Yeah, pound CAD. So this is why we try to keep our average within 1 ADR. Yeah, a 1 ADR move is really easy to achieve. 58% of the time, the market stays within an ADR. 42% of the time, it exceeds its average daily range. So when you look at the statistics like that, what we would expect is at least once a week to get an ADR move. So if you can keep your average within 1 ADR, there's a high probability every week you're going to get an exit on something. That's the whole purpose of it, of scaling into the positions, is to keep your ADR close. Sometimes, however, you get these monster squeezes. And what it means is that your entries are further apart than you would expect them to be. Yeah, we only get in when we get a reverse alert. We get a sign of strength coming back in our direction. Sometimes the market moves so fast and so hard that we don't get a reverse alert until we're miles away. And what that means is our average will suffer. It will not be able to stay within our normal ranges that we try to keep it. Pound New Zealand's the other one I've got. Yeah, so there's the average, there's ADR. Yeah, so I'm short on it. All I need is a normal move down to be out. I mean, I was out. I could have got out of it on Friday, obviously, with some profit, but being held. So, and look, we're extended already. There's an entry now to go short. Market structure broke the lows, so we should expect a pull back up into propulsion and then a drop down, shouldn't we? So, so on the CAD Swiss, that was a mother of all squeezes. This squeezed very, very, very hard. And this is, drawdown control. Getting out of these positions when these squeezes happen will help you dramatically. If you get in and you don't do any drawdown control at all, you will find yourself in big drawdown. That's, you've got to do it. And like I said, it's always, and this is probably why you commented when I was talking about this, it's always the Swissies I find that are the ones that hurt me the most, because the Swissy is such, it's the banking sector, it's the Swiss, everything moves through the Swiss franc, through the Swiss national banks and through the Swiss banking sector from the whole of the Eurozone. If you need to put money somewhere, you put it through a Swiss bank. Yeah, that's why they, Mr. Bond, where is all the criminals' money? It's always in some Swiss bank account somewhere, isn't it? It's true. They put a lot of money into Swiss banking because the costs are less. The tax is disappearing. It's all where the money goes. So when you get a run on safe havens and you get a run starting on the Swissies, you get these big pushes. Not so much when it's the Swiss bank that's involved, but this is why I was doing that. So when you get into these squeezes, as you can see, that was my initial entry. That was entry 2. Entry 3 was there. Entry 4 was there. That was it. So there's a big distance. Yeah, ADR on this is 69. The distance between those two positions is 100. Yeah, so I had to wait 1.5 ADR to take a second position because there was no strength in the market at all until you got down to there. Position 1 to position 2. Almost an ADR. I like to get in roughly half an ADR to an ADR apart. That one, ADR. Yeah. So the distance between that position and that position and that position and that position is an ADR. I'm trying to get in half an ADR as a minimum, but sometimes you just don't get those entries, and that is when your worst positions come in. So as you can see, as we push down hard, the EA is getting me out of these positions gradually. We're reducing our loss. We're creating loss. We're taking losses, but we're reducing the amount of drawdown that we're going into as a percentage to keep on top of it. Waiting for the squeeze to end. The squeeze will always end. If the squeeze doesn't end, everybody that's creating the squeeze in the banks cannot make money. Yeah. If you are shorting something hard, the only way out of your short position is to buy it. Yeah. When we hit the buy button or the sell button, someone on the other side is taking the opposite of our direction of our trade. So if we're getting short on something and it moves down, when we want to get out and take profit, the EA, the terminal, whatever you're doing, is taking a buy position on your behalf. You've sold, now you're buying out of the position. The banks drive a squeeze down and they buy out of the position. So we know that that is coming. It's just you are managing your stress level on the way down, waiting. And the wait is however long the wait is. The longest squeeze I've been in has been over 6 weeks, nearly 2 months. Couldn't get out of it. And yeah, I was in horrible drawdown on it, but I got out of it. Yeah. As long as you're banking, yeah, this is why we're continuously taking the green and putting it over here. We're banking constantly. As long as we're banking constantly, you're going to have room here. So when you get into a squeeze and you start taking these losses over loss, you've got all this to use Worst case scenario, if you had a squeeze on 2 pairs in the same month and it keeps pushing down, you might come out with a break-even month. That makes you a break-even trader. It's better than 95% of traders out there, isn't it? But it doesn't happen often. But you know, you get these sometimes. But if you're still in it, it's probably because your scaling was further apart than you wanted it to be. But you shouldn't be far off, really. Have an exit on this now. And if you want to, just get out of it now with a loss. Learning curve. It's all good. I am under leveraged and my drawdown is not horrible. Also, I've banked along the way. Yeah, exactly. If you're not leveraged to the nines, which is why everybody loses in trading, they get in with way too much size, you'll be fine. Yeah, this is what it's all about. Position trading is all about getting in and getting out. Yeah, in, didn't go my way, take a little bit of loss. Didn't go my way a bit further, take a little bit of loss, take another position, exit, done. So on that trade there and that trade there, I made a profit. I lost a little bit on those two. Those two would not be less than, more than that. So overall, the position was profitable. Those are what we want every day, isn't it? We want to get in, we want to get out. Thank you. But that will only happen one every 6, 7 trades, 8 trades, I don't know. If we could do that every time, wow. But we can't because the market is in control, not us. I posted a video over the weekend on Facebook and in YouTube, my "You Are Not in Control" video. I've had multiple people messaging me saying they'd never seen it before. It's probably because it's really old, one of my really old videos. It's only 10 minutes long, but that explains why you can't make money trading. It's very simple. You're not in control. Why on earth do you think you can make money trading when you can't control the thing that moves? Everybody's trying to pick the laser target the entry. You can't do it. No one can do this. I've had lucky trades. I've had some amazing trades. So I've literally got in there. And I'm like, whoa, look at my 15 to 1. I've done that probably, I don't know, I've been trading 15 years, maybe 3 or 4 times in my life. Not doable, is it? On a regular basis. That's what we're all trying to do. That's why everybody fails. And that's what position trading solves. You don't get that issue. DAX is coming off of the highs. So we've run into that propulsion gap there. I think we've got a little bit more upside potentially, but we are starting to get some limit triggers here. So pullback could be either on that or it could be on that. Or the banks are just going to go, nah, don't like it anymore. And they're going to flop. One or the other. Franco, I saw an old woman a few days ago at the market. Didn't have enough money to pay for groceries. Was short $23. 2 real men stepped up and gave her the money. Exactly what it's all about. Pay it forward. If you pay it forward, you will get it at some point. Hyperinflation, here we come. I don't know that we are going to see hyperinflation. Depends what you class as hyperinflation, doesn't it? I mean, that I class as hyperinflation. I live in the UK. That's pretty hyper for me. We seem to be getting on top of these interest rate rises. Have done the job for the majority of the world. Some are working better than others, but this is what's really scuppered. I think in the past, what we've always had is a very simple mechanism for handling inflation, which is interest rates. And in the past, we've always been able to do that, and we've seen a negative impact on that, which is fine. The problem we have this time is these rates are actually fairly high. And the difference we've got now is there's so many people working from home and there's so much automation that's been introduced by COVID that this whole mechanism, which has always worked very well, is a little bit out of whack now, I think. So I don't think we will necessarily get hyperinflation, but what I'm not sure or is whether or not interest rates now have the power to push this down. Certainly they can hold it. We can see they can hold it. It's holding very well. But look at the 0.1 decrease we had last quarter on euro at 3.5 interest rates. You know, it's not doing its job, is it? And this is why the banks keep saying we will be data driven. We will keep an eye on the data. At the moment, it's very little working. Pound is having the best impact, and the Canadian dollar, but you know, it's not working as well. But yeah, I don't know. You know, we've also never had inflation rising at a rate after a pandemic when a new war has started. You know, this situation we're in right now is very unique, very unique. From a trading perspective, we haven't been in this particular situation before, so it's tricky. Mode, buy gold and silver, physical. Yeah, it's amazing. There's an advert at the weekend in the UK about a company that sells gold coins as an investment. And it's interesting. They've suddenly started springing to life on the TV, and I think there's going to be a flurry of people selling gold coins, because it's always a good investment when you've got some kind of worryful situation in the world, like wars and banks disappearing. Gold is what you want to be buying, obviously. As we can see, gold is flying at the moment, but as soon as that is over, everybody gets out of gold, gets back into the stock market, and gold comes down. And the stock market flies. We have the start right now of a potential head and shoulders. That's your target. Buy DAX. I did. Thank you. I also sold it. I have a hard time to find a difference on the market reverse alerts dashboard to the market reverse alerts indicator. So if you are using the indicator and the dashboard and you see different things here to the dash, the reason you will be seeing a difference is you have different settings here. So for example, use wicks to the left is set to true. Aggressive mode is set to false. Yeah. That might now take a while to kick in. But what, it's not responding at all. There we go. But what you will find is on the indicator, you will have the wicks to the left set to true or false, and the aggressive mode set to true or false, but these will be different to the dashboard. Yeah. So make sure that wicks to the left and aggressive mode is set the same on your indicator as on your dashboard. Yeah. That's the main reason why people find they've got something, you know, it's not doing the same thing. It's that. Gold. Yazib. Kind of looked at gold already this morning. Dixie seems to be cooling. New York session could be interesting. Yeah. Am I short on Aussie New Zealand? Nope, I'm buying at the moment. It's RSI on the hourly. We're looking to come up into ADR really on that one. I'll get out before that, but overall it's a sell long term. You know, this is the thing. Whether or something is a buy or a sell is entirely down to you. If you're trading a 1 minute chart, you're going to have a different signal to a 5 to a 15 to an hourly to a 4 hourly, and a 4 hourly to a daily. Yeah. So, you know, this is why I say I don't get cross with anybody in here when they say, what's your view on gold? But I don't know. What are you trading? Are you trading 1 minute charts? Or you're trading hourly charts? Or you're trading daily charts? Because my view is going to be totally different on every single time frame. Right now, this looks like a beautiful W pattern reversal. But if you go out on the 4 hour, you would be saying, Christ, I don't want to do anything but sell this because we're in a pullback leg on a downward move. You drop down to the M15 chart and it's definitely a double bottom buy with a beautiful propulsion gap target at 125 ADR. You drop down onto the 1 minute chart, you need to be selling it. We've got a reversal alert. Yeah, they've just done a liquidity run of that high. All the smart money concepts traders are saying, we've got a reversal alert to go short, back down into propulsion gaps tested. Yeah. Yeah, but a lot of people are saying, yeah, that's a beautiful market reversal alert on a 61.8 pullback on the fib. And everyone else is saying, I'm waiting for it to come back down into this propulsion gap, so I've got a 50% retracement to go long. Doesn't matter, does it? Analysis is down to you. You get in, you get out, you make money. If you use a stop loss, obviously all you'll do is lose money. But if you don't use a stop loss, your analysis is a lot easier, isn't it? Yeah. You look at the Aussie New Zealand. This is absolute prime example. Should I be long or short on it? I don't care. I'm long on it there and I'm short on it there. And I was long on it there. I was long on it there and I'm long on it again. I've been saying all along, this is a short, isn't it? Look how many of my trades here are longs. I've got one short in there. But how many of my trades are profitable? 1, 2, 3, 4 out of 4. Why? Because I don't use a stop loss. If you don't use a stop loss, you won't get stopped out. Ta-da! Ouch, double D squeeze. What was that I was looking at? Double D squeeze. That was CAD Swiss probably, wasn't it? That is a proper double D squeeze, yeah. That's a hurty one. All the Swissies are hurty ones. Look, Aussies was a hurty one. Euro wasn't quite so bad. Pound, nah, was fine. US dollar Swiss, bigger, faster. This is what I mean by the US dollar. Look, when I was talking about the US dollar Swiss earlier, the rate, the speed and the rate of movement against or with the Swiss franc on the US dollar Swiss is always stronger. This is always the pair that will get you the most hurt the most quickly. If I had to take any FX pair out of my portfolio, it would be this one. Just because of the speed it hurts at. But it's not the end of the world. You can always close positions out. Yeah, and this is the thing, you know, when people, you know, if this gets to a point where you're like, oh, I can't stand this anymore, I can't sleep at night, shut it, close it. Yeah, I've done it. I've done it before in the past. I've gone, oh, I really don't want to hold this over the weekend. I'm too scared. Close it out. The second you do that, you'll be like, and you'll still have profit here, but you'll be like, breathe, right? This is hurting at the moment. When it's not hurting, it's 1.56%, but pound CAD, 1.56%. What's the worst thing I could do now? I could close out pound CAD for these three positions and take a 1.56% off of this. Yeah, 8.3 minus 1.56 is 6.74. So I would be left with 6.74 profit and virtually flat. I'll be in negative 0.3% drawdown. So you can always do that. Or you could go, I can't sleep with this. Fine, take that one off. Reduce this down to 1% instead of 1.5%. And all of a sudden you'll go, ah. Or take a third off of each of them. There's always, you can always close these out all the time. That's the one thing people forget. They get into position, and this is, you know, people, who is it? I don't know, it's a few months ago, wasn't it? Someone came in the live room and we were talking about a pair and he went, I'm 58% in drawdown. We're like, what? How the hell did you get into 58% of drawdown? I got in and 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 I got in. It's like, right, I got in with 1%. It's like, right, for a start, that's far too big for a position. No one takes 1% in a position trade. So he had like loads and loads on, and he was in 58% drawdown. Not done any drawdown control on the way, left every position in. And basically, yes, if you cross your fingers and hope, at some point it will come back. But your account has got to withstand the hope. Very rarely it will. It's just, but if he had have gone after 3 positions or 4 positions, especially starting with 1%, okay, I'm going to close that one out and I'm going to take half of that off. All of a sudden, he would be looking at an average within an ADR, less pain, and probably would have got out of it very, very quickly. Yeah. So just make sure this is what this average is all about. Yeah. And I keep talking about it in the boot camp. This is your control over your emotions. If this is within an ADR, you're always happy. Even if you're in 3% of drawdown on an individual position, if you're within 125, yeah, bang, it's doable. Look at it today. It's easy. We can do that. We do that regularly. We do 125s and 150s. Hundreds, multiple times a week. 200s, not so much. So if you're keeping your average within 200% of your ADR, yeah, you're going to be in pain a lot longer. Just control. It's all about control. That's why I call it drawdown control. Our job is to control our drawdown. I pay no attention at all to anything green, ever. Because everything green just gets put over here. The only thing I need to pay attention to is stuff in red. Is it 1.5%, 2%? No, not interested. Not interested. Right. That one, keep an eye on it. When we get to 3, I'll start doing something about it. But until something gets to a point where I need to worry about it, just forget it. Check 2-3 times a day, check your dashboard. Anything to worry about? No? Right, fine. Go and walk the dog, play with the kids, do some shopping, watch the boot camp again. Whatever you want to do. I think we're stalling out. I don't think we're going to get any more movement on the DAX today. Be an interesting afternoon, I think. I'm good among, yeah, so we've already covered that one. Look at Germany 40, Umer. Okay. What do you want to know about Germany 40, about the DAX? I've been looking at it all morning. There it is. I don't quite know what you want me to say. I've no idea where it's going. That's your question. Is it possible that the EA doesn't manage drawdown control in the strategy tester? No. If you turn on, in the strategy tester, if you use drawdown control, it will do drawdown control for you. Just make sure you've got drawdown control set up properly. Yeah. So when you get into like minus 0.75 of an ADR, then get it to close out 30% on a per trade basis. So as long as you set it correctly, if you're saying you're finding it's not doing drawdown control in the strategy tester, that's because you've set these wrong. You probably put 0.75 instead of minus 0.75. So if you just go and read the manual, it will tell you what you need to put in with the inputs. That will be what it is if you're finding it's not doing drawdown control. And it should be, that's because those are set incorrectly. Road Rage. Hey, I'm trying to learn and I'm looking at Aussie dollar yen. Is this good long on the 1530? You've missed it. No, you haven't. So yeah, potentially. Obviously, if you look at what's going on at the moment. So yes, it's a mean reversion opportunity. You've got an hourly RSI extension. You've got an ADR hit to the downside. So what I personally would have done is M5. That would be the reverse alert retest this morning. So there's your W pattern. Reversal alert retest long. M15, you're just about to get a reversal alert. So if you're trading M15 time frame, you should be using 4 hour for your analysis. 4 hour, you have no RSI extension. So there's no opportunity. There is obviously potential support bounce, which is fine. But if you're trading M15, you need to know, obviously, I never trade, I don't believe in single time frame trading, never have. So if you're using the 15-minute time frame to get into a trade, you have to have an upside analysis time frame. So H4 would be your 15-minute analysis or daily. There's no condition, yeah, to enter. So if you get a signal here, it means nothing if there's no market condition that you're expecting a mean reversion to be from. If you're trading ADR, you should always be looking for 5-minute reversals, not 15s. Because ADR, by the time you get a 15, you've missed the move. Look, you're about to get a 15-minute reversal on the high of that candle. Yeah. You've already missed 44 pips. Yeah. Which is a quarter of an ADR. You've missed more than a quarter of an ADR's movement on it. So H1 M5, H4 M15, or H4 M5. I'm actually trading H4 M5 now. But that's a mean reversion opportunity, yeah, on ADR. But be aware, you are, look at this. I mean, look at this. Look, bang, 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 bang. We are trading against safe haven movement at the minute. So anything you mean revert against the yen, if it starts working like this one, I condemn everybody for using break-even stops, but when you're trading against run into safe havens, then yeah, I would be using break-even stops. When we're in profit, you're in profit, look. So, you know, if you take this one here, moved up, pulled back, you got the retest, pushed up. Yeah, we're approaching an area of potential resistance. So at that point, I'd be thinking, right, if market structure is going to continue short, what are we going to do?
Thanks for the follow.
We're going to reject and drop. So there, I would be looking to do that, because that is either going to do that or it's going to slam through it into propulsion. And then what's it going to do? Hit a potential resistance. If it slams through that, what's it going to do? Hit a potential resistance. If it slams through that, I'd say you're probably safe. But whenever you're in a position, and why, you know, that DAX trade that I got out this morning, why did I get out of that DAX a minute ago? Which one was it? It's that one. Yeah. Why did I get out of that there? Because we're walking straight into a massive area where the market accelerated to the downside. The sellers started the move. From there, we pushed into it. So that's why I exited. So every time I'm in a position long, I'm looking at where are we going to bounce from? I'm always thinking, you know, I don't use TPs most of the time. I do on the EA, but I don't use TPs. All I'm looking at is where are we going to bounce from? Where's the next bounce point? So you're going to bounce there, or it's going to bounce there, or in a propulsion gap. Yeah, push, bounce, propulsion, propulsion, propulsion. Yeah, it doesn't work. You know, it's absolutely, you can slam through it anytime. But if it doesn't, always think worst case scenario. Yeah, so my focus is always on worst case scenario. I assume every time I take a trade, I'm going to be wrong. What am I going to do when it's wrong? Yeah. If I'm right, I'm always thinking, wow, that was lucky. Where is it going to go wrong? Because it is going to go wrong. And this is why people don't make money, because they either don't get out at an obvious spot because they go, I'm getting in here and I have to have a 4-to-1 risk reward ratio. Well, there's bugger all hope of you getting a 4-to-1 today. So if I was you, I'd look at where it's going to bounce and I'd get out there. What can I get out of the market? Not what do I want out of the market? What I want has got bugger all to do with it. Market will go where the market wants. If I want a 4-to-1, it's going to turn around and go, piss off. You can have a 2-to-1 if you're lucky. Yeah, take it. So there is, whenever you're looking to get out of a trade, it's always a case of where are my stopping points? So if I'm getting in this one, on a 15-minute time frame. So if I'm going to take this reversal alert now, my first thought is I'm buying straight into resistance, support, which will turn into potentially resistance. So my first thought is I'm buying straight into a bounce point. So what am I expecting on this reversal alert? I'm expecting the reversal alert to trigger, to get pushed back, and then I'm hoping from the buyers here, they have enough to add in and give me that W pattern reversal, the retest. Yeah. Once that has worked, I'm thinking, where are we going? Well, there's a propulsion gap there where they started to sell out of that accumulation. And then this move down started from up there this morning, and then we've got a resistance. So I'm thinking if this trade works, it could bounce there, there, or there. So I'd be going T1, T2, T3. If I wanted a 10-to-1 risk reward, I'm going to need to hold this for 3 days. Do you really want to do that? No. Hopefully that helps. But for me, there's no entry because there's no extension. There is an H1M5, which is already played out, or is playing out, if you like. That's starting to wobble up there. A little bit further to go. Does that make sense? Hopefully it does. Andy, going to have a look at your bootcamp. Yeah, go and watch the bootcamp. It's all free on the website. Oh, oops. So it's 5 days. Well, it's not 5 days, as long as it takes you. Most people binge watch it in a weekend. But if you're going to do that, go and watch it again because you won't take it all in. It's far too much waffle in there. I waffle a lot, in case you haven't noticed. I started streaming at 8:50 this morning, 7:50 this morning. I'm still here. Took all yen and Swiss pairs out of my basket already. They moved too much for my taste. Yeah, put them back in, but in a squeeze. The trouble is you don't know you're in a squeeze until you're in a squeeze. So it's all very well saying I'll take out the Swissies and the yens, but you're going to need them back in there when the banking crisis panic settles down. They're good. They're good to trade. Yen's awesome to trade. Swiss is brilliant to trade. I also have some of my best trades out the Swiss franc. Because when it moves, and when you write it, you're really right. But in times of instability, as we are at the moment, they're tricky. So if you leave them this week, you'll probably be all right next week. Franco, got to close my site. Going home, peace all. Cool. Get that bag. Good one, Franco. Can I explain how ADR works? Yeah, there is a video on it on the website. So if you go to the other free trading education, there is a video on ADR. There you go. That's a profit from average daily range. It's also on the indicator page. So if you go to the ADR reversal indicator, there's a video there that explains it. But basically, ADR is the average daily range of an instrument. So it's the same on every time frame. Yeah, it's the average daily range of that particular instrument. So what price does the vast majority of the time is it stays within its average daily. Let's not look at a yen, shall we? Let's look at something more realistic. So the vast majority of the time, it stays within its average daily range. So average daily range is measured from the high to the low of the day. So the range for that day there was 50 pips. Yeah, the range for that day there was 94. The range for that day there was 111. The range for that day there was 46. Yeah. So if you look at that, so the ADR4, so the average daily range of those 4 days will be a combination of adding those together and dividing them by 4, and that will give you an average. Yeah. And this is what the ADR indicator does. So I use ADR 10, which is 2 weeks. There's 5 trading days in a week, excluding Sundays. So I take ADR 10. So I'm looking at what is this pair been doing on average for the last 2 weeks. And then that is plotted on the chart for me. I've done analysis over, I never remember. It's all covered in the video. Something either 15 years or 25 years. Doesn't matter. I've done analysis over decades as to how price moves. And every single Forex pair has statistics which are within 1%. Yeah. So I took an average of everything and I given these levels. So price stays within its average daily range 58% of the time, which means that 42% of the time it moves beyond its average daily range. Yeah. When it moves beyond its average daily range, it will only get beyond 125% of its range 23% of the time, and then it will only get beyond 150% 12% of the time. So as you move further away from the average, the odds of it exceeding further drop dramatically down to 225 ADR, where it only gets beyond that 2% of the time. We don't see ADR 225s very often, which is why the dashboard only goes to 225. Yeah. If it's gone beyond that, there's a fundamental shift. Something has gone really, really wrong with that instrument. And you need to stay away, basically, because something has fundamentally changed. An interest rate rise was not given. We were expecting a 0.5 increase. They went, no, we're not going to do it. It's going to fly within 225 because the market's going to bail out of that instrument. Yeah. So with ADR, the further away you get and more extended you get beyond its average daily range, the more chance there is of it pulling back. So this one here is 76. This move here from low to high was 115. So 115 divided by 76 is 151. So that was 151% of its average daily range. And then look what it did afterwards. So, and the same one there, that was an ADR of 90 odd or something. So that was 120 or 115 or something. And then it pulled back. Yeah, market structure. So what we do with ADR is when we get extended beyond ADR, we look for mean reversion opportunities. So we expect it to pull back into that range, i.e. the market takes a profit. Here we go. Here's one here. There's one on the screen, isn't there? We can look at right now. Yesterday, Friday, we pushed up beyond ADR. So ADR is 76. Here's the low. It's there, but it's there roughly. So we pushed up 120 pips. So when we got to 76, it was there. Yeah, so that is where our alert went off and said we have hit 100% of its average daily range. So I drop down to the M5 time frame, wait for a reversal alert. So wait for some signs of weakness in the move, enter. And then it either comes down or it pushes up or whatever it does. But I get out then with roughly a quarter of an average daily range in this case, which is around about 19 pips. So that profit take from that entry there to there was 38.7, which is half an ADR. So I'm targeting half an ADR on this one. So your average daily range lines will move basically as the day unfolds. So this line here will always be 76 pips from the low of the day. There you go. So that is 76. This line here will always be 76 pips away from the high of the day because these lines measure where the average daily movement gets to. Or 58% of the time. Yeah. So as this moves down, this might actually be a perfect example. Look. Yeah. So you see this green line here, we're pushing down. As price pushes down below here, this green line will move down because this green line is kept 76 pips away from the low of the day. If we make a new low of the day, that will be further down. Yeah. So when we have moved up and down our average, we get an alert. And that's basically average daily range. Nothing to do with pivots at all. Nothing to do with pivot points. Pivot points are a fixed level. ADR is dynamic. ADR is a dynamic measurement of price movement, not pivots. Pivots are fixed. So yeah, so if that pushes down now, you will see it won't do it now because I want it to, it won't do it, but you'll see it move down. But if you want to see it, let's stick it in the let's stick it in here. This will show you. Look. I'll do it on control points. Actually, let's do it on tick. I'll do on the 5-minute chart. Okay, so you'll see it move. It will draw the ADR lines. There you go. So there's ADR high and ADR low. And you see that is the current price. So where we are now, that will be 103 pips up and 103 pips down. And then as the day moves on, you can see the ADR low moving up and the ADR high moving down. Yeah. And now we are in, so there's your low, there's your high. And now we're mucking about in here. They stay stable because this is always a measurement of average daily range from those points. So if this pushes down to there, it means we have pushed down one average daily range measurement from that high point of the day. That is when we find that tends to happen. So market structure moves like that. So as we push, we move down roughly an average daily range most of the time. So after we've moved down an average daily range, we tend to pull back. And we pull that back usually a quarter to a half of an average daily range. Yeah. So that's what it's doing. You see it will move. There you go. So now we hit there 125% of its average daily range. So average daily range is 103. Measurement from top to bottom is 132. So we're 132 pips away from there. And you see the bounce we got off of ADR 125. Pop back up. Why? Because we've moved more than our average daily range. The banks run out of money. The banks can only move within an average daily range most of the time, which is what creates the average daily range. The average daily range is created by the interbank movement. Yeah, so the banks transacting with each other. So we know that this is going to work because this is done by the banks. The banks set this. They don't set it. There's no setting in their bank system that goes, oh no, you've moved that far. It's just that's what they normally do. So when they do things outside the norm, we know that something's happened. When something happens outside the norm, we tend to get a reaction. The reaction is what we make our money on. Yeah. So you see that nice pull back from 125 ADR. Push down again. So pushing down, pushing down, pushing down. There you go. So what happened there? That was one of our 58% days. We stayed within our average daily range. We do that 6 out of 10 days. 100 ADR, pull back. 100 ADR, pull back. See how price gets to it and goes, and it struggles. That's because on average, that's all the banks have the ability to do is move it that far. So if we know how far the banks have an ability to move it on a daily basis, we can pay attention to those levels. And exactly the same, we were talking about taking profit earlier. What would I see a good TP being on Aussie dollar yen? Yeah, so if you're going to go long on Aussie dollar yen, where's a good TP? ADR. Why? Because that's on average where we get to. So if you realistically want to set from this reversal alert that we just got on the 15-minute time frame, yeah, if you realistically want to set a target on it, that's pretty good. 125 would be pretty good. Why? Because it's within a propulsion gap. It's within reach. This is what it's all about. Trading, keeping your trades and your targets within reach. There's no point in getting in here and setting a 3 ADR target on it when the market hasn't got the ability to reach 3 ADR. Yeah, a 3-to-1 risk reward. So if you get in there and there, your target is going to be 3 times. So it's off up there somewhere. Why not just get out here? Because this can be done very easily. 90% strike rate on a 1-to-1. Pretty easy. Anyone can get a 50, 60, 70% strike rate on a 1-to-1R. But why do we go for 3-to-1? Because that's what the market is. That's what we're taught. We're taught to do something that's very unachievable. The best traders in the world are achieving 0.75 to 1.5 R return. Yeah, they're not getting 3R returns on trades. Trend traders who go for those 5-to-1, 6-to-1, 7-to-1s have a 20 to 30% strike rate. Why? Because it's virtually impossible to do it more than that. Because the market spends 80% of its time in a range, in mean reversion. So if by the very fact that it spends 80% of its time in mean reversion, you only have a 20% chance of a breakout, which means you've got what? A 20% chance of a range forming. So why do we mean revert? Because there's an 80% probability. Again, go back to the website. There's a video on it. Somewhere. Mean reversion versus trend trading. Which should you be doing? It's not rocket science, is it? The market spends 20 to 30% of its time in a trend. Do you want to be a trend trader? I'd rather be a mean reversion trader because 80% of the time I'm going to be right. It's just logic, yeah? And that's what I've spent my entire trading career doing, is analyzing the logic and the movement of price. And as long as price moves in a logical manner, there is a way to extract money from it. When it's not logical, then yeah, it's hard. But there's very few times it's not logical. Times like now is not logical. It is logical. We know it's going to happen, but it's not normal. It's not normal, is it? This measures normality. When we get extended beyond normality, we tend to get a reaction. The reaction is what we benefit from. For every action, there has to be a reaction. For every sell move, there has to be a profit take. As long as you know that's coming, you can get on it. You will never be able to time it. That one took me 3 attempts. Because what can't I do? Time the market. Why not? Because I'm not driving the bus. It's like coming up to a T-junction in a bus. All right? Never been on the bus before. What's your odds? When you hit the buy button here, what's your odds? Why on earth do you think you could time your entry with a 50-50 chance? You can't. Your chances are 50-50 every time you press the button. You can increase your odds by using condition indicators, which you know historically have a chance of being better. But even so, the vast majority of the time, you will get your entry wrong. If you use a stop loss, you will be wrong and lose money. If you don't use a stop loss, you will be wrong and make money. You're going to be wrong most of the time. So eliminate the thing that loses the money and all of a sudden you're profitable. That's position trading. But it all revolves around logic. The logic is to do with price movement, market structure, yeah, range of movement and market structure. That's all you need. And conditions where we expect a movement to come from. This is what the bootcamp teaches you. It teaches you how the market moves, how the banks work. It teaches you the conditions to look for, which tell you when the banks are about to start a move. And it teaches you that you can't time the move. So all you do is you get into the move and wait for the banks. The banks are driving the bus. We're the passengers. If you try and annoy the driver all the time, he's just going to tell you to sit down. Every time you sit down, you take a stop. Every time you stop out, you lose 1% of your account. You get told to sit down 10 times, you've lost 10% of your account. If you take a trade 10 times without a stop loss and you wait for the bus driver to get to his position, what you do is you make money, but you just eliminate that bit. That then becomes green. You just control it. You control your temper. This is you not telling the driver, where are we going? Where are we going? Yeah. Well, that's a good analogy. I'm going to use that one next time I'm in the doing live boot camp. So there you go. That explains how that works. At least the waffle is more pleasant than the unhinged, endless rant ICT sometimes. I don't listen to him. I don't watch ICT at all. I got nice profits from them, but the current fundamentals are crazy at those pairs right now. I will consider putting them back in. Yeah, so just be careful with the Aussies, the yens rather. The yens are at the moment very illogical. But everything becomes illogical at a point. You know, nothing is good coming up to our potential entry here. Nothing is ever safe. There is nothing, you know, people say, oh, I don't trade that because it's unsafe. It's like, what's unsafe? Nothing's unsafe. You trade the Aussie dollar, New Zealand dollar. Yeah. I have done this. I was trading this pair quite happily. And then we had an earthquake in New Zealand. Do you think that was safe? Nah. Actually, it went that way. Because the New Zealand dollar crashed. Because there was an earthquake. Doesn't matter what you trade. At some point, that earthquake will hit that currency. So you trade everything and you just get on with it. And the stuff that goes wrong, you deal with it. The stuff that goes right, you just don't deal with it. You put it in the bank. It's automatic. Which brings me back to my point that I keep mentioning, this 5 steps to becoming consistently profitable. Yeah, this step 5 is where you make the most of your money, and it's called autopilot. You learn a strategy, you trade the strategy, you just let the market get you in and out of the strategy on autopilot. Don't even think about it. The EA takes all of these trades. I haven't pressed the button on any of this. This is just fully auto, because it's just a condition in the market that I see over and over again. And I tell the EA to get me in when it sees that condition, and it just gets me out when I've got some profit in the bank, and it deals with the rest of it for me. So this propulsion gap here, so this propulsion gap that broke this low, that is potentially coming your resistance. This is where the sell move continued in this case. Yeah, so these are both valid areas on M5, which will potentially come and get filled, same as they always do. Yeah. So there's a potential short opportunity here, 125 ADR. And if we were to get above 150, again, look at the odds. On a normal day, is this a normal day? I don't know. This is obviously a massive undoing. Oh, here we go. Some news coming in. Bank of England 25-point basis cut fully priced in by year end. Yeah, okay, that could happen. Goldman Sachs, we expect the Fed to pause its March meeting this week because of stress in the banking system. Oh, right. So possibility of US dollar, moving down. It's just started to react negatively, which is going to put a bullish bias on all the stock indices. So could do that today. So basically, if the Fed come out, what they're saying is basically FOMC may get cancelled this week, meaning that they may not announce that, meaning that we get a 4.75 freeze, meaning the market will be very, very unhappy with the US dollar because they have priced in 5%, which means that all of their positioning is going to be wrong, which means they're going to have to scale out of their positioning on the US dollar, which means everything will drive back into the indexes. So you'll see rallies in all the indexes, and you'll see drops in the US dollar. So that buy there, this is why you need to keep on top of fundamentals. That buy there, yeah, is not a good buy. So protect it. There we go. So this reaction is sell orders, limit orders set at that level, because everybody that's selling this from Friday is adding into their short positions. Think of market structure. Fibonacci. It's a 50% retracement. Self-fulfilling prophecy. Everybody that trades Fibonacci is shorting it here. Everybody that trades propulsion, or ICT people that call it a fair value gap, yeah, they're all going short here. Why is it going short? Why is those limit orders triggered? Because there's a load of orders there to go short. Is there enough money in the banks to overwhelm it? We'll find out in a second. Do I know? No. Because I'm not in control. Most important thing, you're not in control. I can never say your name. CAC for the world. I've carried on doing some back testing over the weekend with the market reversal at EA on different pairs. I'm sort of at the stage now where I'm ready to purchase and run a demo before going live. Even had some nice results on stocks. Tested on Apple and AMD, yeah. So if you're going to trade it on stocks, I used to trade stocks, as you know, but I don't position trade stocks. So if you're going to use the market reversal at EA to position trade stocks, short on the DAX. Just going straight in with a market order short on the DAX. If you're gonna trade stocks with it, just be very careful about gaps, because stocks gap. And if you get an earnings gap against you on a stock, you will basically blow your account. Your drawdown will be far too big. If you're using it to trade intraday using a mean reversion strategy like the H1M5 or the H4M15, just make sure that you don't hold over a weekend or you don't hold into earnings, which means that, let's say, for example, you are in this trade here. Oops. So let's say, for example, you got in here on AMD, yeah, and it pushed down, and you got in here on AMD. If here is Friday, you have to make a decision. Do you close those positions out? Or let's say this is earnings day for AMD. What are you going to do? This is why it's difficult to trade stocks as a position trader, because unless this is a very, very, very small position size, in which case is it really worth doing it, you run the risk of getting gapped and hurt badly. So if you're using the hedging set file, it's not necessarily quite so dangerous because you'll have a hedge short on, but I don't like hedging. So Malachi Garcia template. My template is on the website if you want it. It's under indicators, other indicators, and template. I appreciate that so much. You explained it so well. Just jumped on your site. I'm going through all of it. Good luck. See you next week. Take a week off. 15 years worth of my knowledge on there. I just finished the 4th bootcamp yesterday. I would guess you saved me 4 years of figuring out stuff on my own. Cool. Also bought the reversal EA yesterday. Cool. Hopefully that will, well, help, but can't pay for my course because my course is free. The EA, everything I make through selling the indicators and EAs, which isn't a lot, that basically just is kind of payment for my time, I suppose, if you like. That's the way to look at it, because that's what I do, spend my entire time on here. I'm up to 3 hours 18 today again, so I'm going to go now because I also have to have lunch and I have some other work to do on an EA I'm building or testing, a strategy I'm testing basically. And then I'll be back this afternoon at 1:20. My problem at the moment is because the clocks have changed, I don't actually have much time between streams. Next week, when the clocks change, I'll be back on at 2:20 in the afternoon. So we've got the daylight savings shift on Sunday. So next week, afternoon live rooms at 2:20 UK instead of 1:20. So I get an extra hour to do other work, which is nice. So I'll be back on later this afternoon at 1:20, ready for the New York session and see if we can milk something out of New York. So I've had little luck this morning out of here, $300 up, but quite possibly going to give it all back on this, but we'll see. So this will either work or it won't. I do use stop losses on scalping, by the way, in case I'm confusing the crap out of everybody saying, don't use a stop loss, don't use a stop loss. I don't use a stop loss when I'm position trading. When I'm scalping, I do, which is why scalping, as you saw, went from $1,000 down to $300 because, yeah, stop losses lose you money. But I have to have them on prop. I don't have a choice because it's either that or blow the account, isn't it? So yeah, I'll be back this afternoon. We'll trade the DAX, the NASDAQ this afternoon, see what happens. We've got some big movements already happening on the stock indices. So, oh no, we haven't actually. Sorry. Oh yeah, I thought something, it's the Dow that's moved. So the Dow, we've had an ADR. Look at that for an ADR bounce there. Buying. Thank you very much. If you took it, I didn't take it. So yeah, we have had some movement on them, but we'll have a look at them all this afternoon. This thing could go anyway this afternoon. There seems to be a lot of faith coming back in, it seems, back into the stock market. but I'm not convinced it's going to stay. We only need one news event on here and it's all going to go wrong again. So we'll see what happens. But I'll be back this afternoon, same time at 1:20. We'll trade the afternoon session, have a look at FX, see what's gone on, hopefully make a bit of money, and then we'll see what happens. But also back tomorrow morning, 7:50, same time for the DAX and the Frankfurt session. All right. So have a good day. If I don't see you later, if I do, I'll see you later. Have a good one.